Yep.
Okay,
Then
it's good. It's good. I recall.
yeah, then let's get started. So yeah, you know the basic smart money concepts, right? Like
Yes,
what
yes.
order blocks are, what
I-
liquidity is, imbalances, and all that stuff. Yeah.
yes, man. I do.
Okay. Okay. So now let's get started with this. Now, do you know about the strong highs and the strong lows? Yeah, the strong highs and the strong lows. Okay. So
Yes, I heard
yeah,
about this. Yes.
yeah, so something like this, okay, because understanding that will be very important because that is what we will be using for entries and yeah, to get a directional bias and yeah, for confluence and everything. Okay, so let me show you. So
Okay,
a
okay.
strong high is something like this. Okay, a high that takes out liquidity and then breaks structure. That's it.
Yes,
Okay, this is all you want to see. Okay, it has to do a stop hunt,
yes.
and then it has to give you a break of market structure. Okay, this
Reconstruction.
is it. This is all you want to see. Okay, so and also now when I say liquidity has to get taken out, it doesn't have to be equal highs all the time. Okay,
Yes,
or else it doesn't have to be a trend line all the time. No, just one single swing high or a low is still liquidity. Okay, like do you know the three candle formation for a swing high and a swing low? Yeah,
yes,
the
yes. I
three
do.
candle
Yes.
formation. Yeah. Okay, so if there is a swing high like this, okay, and if price runs above that high and gives you a break of structure, this
Yes.
will be considered as a strong high. Okay, that's it. And then yeah, same thing for a strong low. Okay, it has to run below a previous low and give you a break of market structure. This is it. Okay,
Okay.
so a stop hunt and a break of market structure. Okay, so yeah, remember this very well because this will be very important. Okay, this will be very important. And also, like we will not be focusing a lot into the lower time frame strong highs and strong lows. Okay, because yeah, on lower time frames you might have many and you will
Yes.
get confused. Okay, and you will get confused. So we will be looking at the high time frame ones. Okay, I'll show you examples. So we will mainly be focusing on the high time frame ones. Okay, now what happens in the market is something like this. Okay, so let's say we had a stop hunt. Okay, I'll just draw this out to you and let's get into charts. Okay, I'll show you
Yes.
some examples. I'll do, yeah, let's do a top down analysis and everything. Okay, so let's say we had a stop hunt, a breakout structure, and then yeah, price might retrace and give you another break. Okay, so let's say this is simple. Yeah, this is simply market structure, right? Now we have this
Yes.
high. Yeah, we have this high. Then yeah, then we have this lower low, lower high, and a lower low, right? This is what we have. This is
Yes.
market structure. Now, if someone wants to re-enter, okay, if someone wants to enter the market, what will they expect? They would once again expect a lower high and a lower low, right? This is what anyone will expect because why the market is still bearish. Okay, the market is still bearish. So this is what the majority of the traders would expect. Okay, so first of all, what will the smart money traders do? Okay, what would the smart money traders do? Now they might look for maybe an order block or something in this area,
Yes.
right? They might look for an order block or something in this area, set their sell limits here, stop loss above that high, and they will target lower prices, right? So this is what the smart money traders would do. We know that.
Yes.
Now,
Yes. Yes.
not only the smart money traders, even the supply and demand traders would do the same thing, right? They'll tell you that this is the supply that broke the structure. Or they might tell you this is something like a rally, base, and a drop. Okay,
Yes.
they'll tell you
Yes.
that. Or else, yeah, now what we should understand is that not only smart money and supply demand traders wants to enter the market here. Okay, we have trend line traders. See that? Now we have the trend line traders. Now, what are they
Yes. Yes.
expecting? Yeah, they are expecting a retracement back into the trend line and then a drop to the downside. So then what
Yeah.
they will do is, yeah, they will sell it once it gets here, stop loss above the previous touch to the
Uh,
trend line, and they will target lower prices. Right? This is what the trend line traders
everyone
will do. Yeah.
everyone put the stop loss at the same place.
Yeah, same place. Okay, like
Yeah.
we're calling us as smart money traders, and we're also placing the stop loss at the same place. Okay, so there's
Yes.
no difference at all. Now, not only trend line traders, we have break and retest. See that?
Yes.
Break
Yes.
and retest. Now, what would they do? Like, you know what they use as a confirmation? Maybe something like a bearish engulfing candle. When price gets here and gives you that bearish engulfing candle, they'll sell it, stop loss above that candle, and they'll target lower prices. Okay,
Mm.
this is what they would do. And same thing with the support and resistance traders, because why? A broken support will turn into resistance. Okay, this is what we call a flip zone. Okay, this is what
Yes.
we call a flip zone. Okay, a
Yes.
broken support turning into resistance. We have that liquidity. And not only that, since this right here is a swing high, we have buy stops resting above that. Okay, because we know that above every single swing high in the market, there are buy stops resting. Okay,
Yes.
so now just think of it. In this little bit of price action, where is the most amount of liquidity? Above that high, right? Above that
Yes.
high. Okay, like the stop losses of 90% of the traders are above that high. Okay, so now as a smart money trader, if we do something like this, see, we're doing the same thing as a retail trader. They're entering from a trend line. we're entering from an order block, but with our stop loss at the same area. So there is no
Yes.
difference at all. Okay, so if you're a smart money trader, the main thing is to first think like the smart money. Okay, think like the smart money. Like, what are the intentions of the smart money? That is to take out the retail traders, right? Just to
Yes.
take out the retail traders. Now, in order to take out the retail traders, they have to obviously run above that high, right? They have to run above that high. So now, if you try to sell it here with your stop loss above this high, you're getting stopped out too. Okay, you are getting stopped out too with that retail crowd. So then what we will be doing is we will not be looking for anything around here. We will be looking for something above that. Okay, we will be looking for
Okay.
something above that. Okay, so yeah, I'll show you a lot of examples, then you will understand. But yeah, this is what we're going to do. We'll be looking for something above the liquidity. Okay, now this right here could be an order block. Okay, this could be a breaker block. You know what a breaker block is, right? Yeah.
A
This could
bit, a
be,
little bit just.
okay, I'll tell you. Okay, this could be a breaker block. This could be a rejection block. Okay, yeah, don't worry. Everything's the same. Okay, an order block, a breaker block, a rejection block is the same
Yes.
thing, but in different forms. Okay, but
Okay.
I'll show you
Okay.
examples, then you will understand. Or else this could be an imbalance. Okay, this
Imbalance.
could
Yes.
be an imbalance. Okay, this could
Okay.
be anything. But what makes it a high quality point of interest is the liquidity that is resting right below that. Okay, this
Okay.
liquidity is what's going to make this a high quality zone. Okay, so once again, yeah, now how are order blocks formed? Let's go through that, then you will understand breakers
Oh,
and rejection blocks. Okay, so that, yeah, that then you will understand both of them, because
the
a higher time frame order block is a lower time frame breaker block. Okay, and a higher time frame rejection block is a lower time frame order block. Okay, something like that. So that's what I
okay.
told you. It's the same
Okay.
thing in different forms. Okay, it's the
Okay.
same thing in different forms. So first of all, now how are order blocks formed? Okay, so let's first say maybe we had equal highs. Okay, let's say we had equal highs. Now retail traders would think, okay, a double top is a sign of a reversal, right? They think this is the indication of a reversal. Then what they would do is, okay, once it gets into somewhere around here, they'll be expecting sell-offs like this. So
Yes.
they will try to sell it, stop loss somewhere around here, and they will target lower prices, right? This is
Yes.
what the double top traders would do. But the institutions, okay, or as whoever that runs these markets, they know that. Okay, they know that. So what they would do is they will place a huge buy order like this. They stop out everyone that wanted to sell from this double top, and after taking out their stop losses, they will place a huge sell order
Oh,
like
yes.
this.
Yeah.
Okay, so this is what happens. So an order block is the last push up before the push down, right? An order block is the last push up before the push down. We know that. Okay, then what we will be doing is, okay, now, like, we're not going to chase the move. Okay, we're not going to chase the move, because why? Now what the institutions did was they placed a buy order from here, like multiple buy orders. Okay, not just one, maybe from here, maybe from here, maybe from here. They're placing buy orders to take out the stop losses of the double top traders, and then they do a huge sell off. Okay, so this right here is the formation of an order block, the last push up
Yes.
before the
Yes.
push down. Okay, this is the formation of an order block. Now if you drop into a lower time frame, okay, if you drop into a lower time frame, you can refine it to one single candle that is down here. Okay, the last down move before the expansion to the upside. Okay, the last down move
Yes.
before the
Yes.
expansion to the upside is what we call the breaker block. Okay, this is
Okay.
what we call the breaker block, guys. This is the last injection of buys before the sells, right? This is the last
Yes.
injection of buys before the sells. So which means
But
this is where, yeah, this is where the sellers broke these buyers. Can you understand that? Okay.
I don't get why the breaker
Yeah.
block is a bearish candle.
It is a bearish candle. Okay, a breaker
Yes.
block is the last down candle before the expansion. Okay, the last down candle
Yes.
before the expansion. Okay, so yeah, like honestly, that is something something from ICT. You know
Yes,
that's something from ICT. Yeah.
Okay.
Okay, so
Yes.
if you just understand the logic behind it, that is all, like, that is more than enough. Okay, that is more than enough, because just understand it like this: a higher time frame order block is a lower
Yes.
time frame breaker block. That's
Okay,
it.
man.
Okay,
Okay,
that's
okay.
because, like, if stuff is confusing you, don't overthink. Okay, just try to keep it simple. Okay, just try
Okay,
to keep
man.
it
Okay,
simple.
okay.
As long as you know the logic behind it, that is, yeah, the logic behind it, it's more than enough. Okay, that is more than enough. Okay,
Okay,
so
okay.
yeah, something like that.
So
And then yeah,
most of
yeah,
excuse me, most of
yeah,
the time they only mitigate the breaker and not all the impulsive move.
yeah. Sometimes they just come back into the breaker and then they fall down. Okay, so I'll show you when to choose the
Okay.
breaker, maybe when to choose the order block, or yeah, I'll show you.
Okay, okay.
So yeah, because everything depends on where the liquidity is. Okay, everything will depend on
Yes,
where the
yes, yes.
liquidity is. Okay, so yeah, this is what we
Okay.
call a breaker. And then Now let's talk about a rejection block. Okay, a rejection block is a candle. Okay, a wick. Okay, a rejection block is a wick. Okay, so
Yes.
something like this. Now let's talk about wicks. Okay, so now I'm gonna draw a bearish candle. Okay, I'm just gonna draw a bearish candle. Okay, yeah, that way you will understand it. Let's say we had this. Yeah, because it's the same thing, but yeah, in different forms. Okay, same thing in different forms. So let's see. Let me draw this out. Okay, so now let's say this right here is a bearish candle. Okay, this, let's say this right here is a bearish candle, and yeah, let's say the previous candle closed in here. Okay, let's say the previous bullish candle closed in here. Okay, so yeah, let me draw this out. Yeah, like this. So let's say the previous candle closed here. Yeah, so now where did the bearish candle open? Okay, where did the bearish candle open? From here, right? This is where the bearish candle opened. Okay, then as it opened, what happened now? Something like this. Okay, now I'm gonna draw the anatomy of this candle. Okay, so something like this. This opened.
Yeah.
Buyers started pushing it up. Can you see that?
Yes.
Buyers started pushing it up, and then sellers started pushing it down. Yeah, then they took over. That is why it closed as a bearish candle, right? That is why it closed as a bearish candle.
Oh,
So
yeah.
now what is an order block? An order block is the last push up before the push down, right?
Yes.
The last push up before the push down. So now in here, we're not going to look at the order block. We'll be looking at the rejection block. Can you see that?
Yeah.
The wick.
Yes.
See? So the base of the wick. Okay, if the base of the wick is untouched, we can use that as a point of interest. Okay,
Yes.
we
It's
can
the
use
highest.
that as a point of interest. Okay, can you understand that? Okay, simple.
Yes.
Simple, but it's very important. Okay, very, very important, because we will be using breaker blocks a lot. Okay, we'll be using, I'm sorry, not breaker blocks, rejection blocks a lot. Okay, the wicks, the unmitigated, the base of the wick, we will be using that a lot. Okay, so I'll show you. Okay, I'll show you a lot of examples. So can you understand this? Like, you understand the logic behind it, right?
Yes.
I hope it is clear. Okay.
Yes.
Okay. So then, like, everything depends on where the liquidity is. Okay. So yeah, let's go to that. Then I'll tell you. Okay. Now let's say right above this liquidity, we have a rejection block. Okay. Then we're going to choose that. Let's say above that, we have an order block. Then we're going to choose that. Let's say above that, we have a breaker block. Same thing. Okay. We're going to use that, something like that. Okay. So everything depends on where the liquidity is. Okay. This is what's important. Okay. Now, what could happen is the market might retrace. And once it gets here, it might even give you a breakout structure on a lower time frame.
Oh, yes.
Right? Now, after getting this breakout structure, inducements. Okay, now what happens? After getting this breakout structure, more and more sellers are getting in, right? Now, more and more sellers are getting in. Now, what they will do is, okay, they'll think this right here was their confirmation entry. Now, they will be expecting a retracement back into that lower time frame point of interest, and then expansion to the downside, right?
Yes.
This is what they would expect. This is what they would expect. So now they'll be looking for maybe lower time frame blocks like this. Okay, now they'll try to sell it here with their stop loss above this high now, because why? That way they can increase the risk to reward, right? And then they will have the same targets. Yeah, this is what
sell more.
Yeah, they'll sell more. Okay, but now what happens is more and more sellers are getting in. Okay, and the best thing is the market might even respect these areas for a while. Why?
Yes.
More and more sellers, like they're inducing. Okay, they're making more and more people get into this trade. Okay.
Yes.
And then what happens is, yeah, once enough liquidity is built up, they will do this. They will quickly start buying it up.
Yes, they take it.
They'll quickly, yeah, they'll take out everyone. They will take out everyone.
Yes.
And also, now what happened was this right here was the lower high, right? If you're looking at market structure, the market was like this.
Yes.
This was the lower high. Now, if this happens, people will think this is a breakout structure.
Yes.
Right now, since price has gone above that high, now everyone will be confused. They will think, okay, now we have a bullish shift in market, right? They'll think we have a bullish breakout structure, but that is the inducement. Okay, that is the inducement. People are induced into believing that this right here was a breakout structure, but it's actually not. Okay, now you will understand this very clearly once we talk about trading ranges. Okay, because trading ranges will be very, very important. Okay. Trading ranges will be very, very important. So once we talk about trading ranges, you will see that this right here wasn't even a valid structural point. Okay, this is what we call internal range liquidity. Okay, this is what we call internal range liquidity. And then, yeah, they buy it up, they take out everyone that wanted to sell here. Okay, and then remember, if they want to go lower, they will induce buyers into the market first. Okay, if they want to go lower, they're going to induce buyers into the market first. Because why
Yes.
would they do that? Because only if someone buys, they will have their stop loss below a low, right? Only if
Yes.
someone buys, they will have their stop loss below a low. So now what they're doing is they are inducing buyers into the market. So which means stop losses will get built up below these lows, and most importantly, below this low. Because
Mm.
why? Now people are expecting a retracement back into this area and an expansion to the upside,
Yes.
right? Now, smart money traders, once again, they'll start looking at odd blocks in here. Supply and demand traders will start looking at demand zones in here. Okay, some people, let's say maybe Fibonacci traders might draw their Fibonacci's like this, call this the golden ratio, sweet spot, and everything, and they will also
Yes.
buy it, stop loss below that. Okay, so now, yeah, like if you know ICT, he tells you liquidity is something like a magnet. Okay,
Yes.
liquidity is like a magnet and price is like a paperclip. What happens? It draws towards the magnet, right? This
Mhm.
is what happens. This is what happens. So you will have to always know where this magnet is. Okay, where this magnet is, because that is where price is going towards. But remember, market structure is the most important thing. Okay, market structure will be the first one. Then comes liquidity. Okay, so structure combined with liquidity, because market structure is the one that's going to give you the direction. Okay, because
Yes.
if you understand the direction, the entries will be very, very easy. Okay, your entries will be very easy if you understand the direction, because that's the thing most of the people are struggling with. Okay, if the direction, if you understand the direction, your entries will be very easy. Okay, so now what
Okay.
happens is, yeah, this moves up, will take out everyone that wanted to sell here, including the ones that got their confirmation entries, and
Mhm.
then they induce buyers into the market. Now see, buyers are induced into the market in the form of buy stops. Okay, buy stops are activated because
Yes.
since this was a swing high, breakout traders had their buy stops above that high,
Yes.
and then they will quickly push price back down like this. Okay, they'll quickly move down, and in these areas might give you reactions once again. Why? Because there are people who wanted to
To
buy it here, right?
induce.
They are
Yes.
induced. Now more and more buyers are getting in, and when enough when enough liquidity is built up, they will do this.
Uh,
Okay, then everyone gets
they
stopped
fuck
out. Okay, so
everyone.
yeah, exactly.
Uh,
Now then smart my traders will tell you, oh, order blocks does not work anymore. Order blocks aren't working
yes.
anymore. We tried to sell it here, even the confirmation entry got stopped out. We tried to buy it here, even the confirmation entry got stopped
It
out.
doesn't work.
Yeah, it doesn't work that way. Okay, it doesn't work that way. Okay, so we will be focusing more on this. Okay, the entry above the retail pool of liquidity. Okay,
Okay.
the entry above the retail pool of liquidity. So the safe place for the stop loss is above the strong high, but yeah, I know the stop loss is too much. Okay, I know stop loss is too much. The risk to reward isn't that good. So
21.
we
Yes.
can, yeah, we can have it above the point of interest. Okay, yeah,
Yes.
I don't use anything more than 5 pips or less than 2 pips. Okay, so the maximum would be
Okay.
5 pips. Okay, so I'll show
Okay.
you. And then, yeah, and the other thing is like we don't even have to go into the lower time frames. Okay, like I'll show you. Okay, we can get the 3 to 5 pip stop losses from the 1 hour time frame itself, sometimes even from the 4 hour time frame. Okay,
Oh.
so I'll show you.
Oh.
Okay,
Okay.
yeah, you don't have to go into the lower times, because that's the misconception. People think if you are a smart money trader, you have to deal more with the lower time frames, the 1 minute time frame. No, that's bullshit. Okay, that's not it.
Yes. Yes.
Okay, you can just get tight stop losses like 3 to 5 pip stop losses from the 4 hour and the 1 hour itself. Okay, so I'll show you. And
Okay.
then,
Okay.
yeah, you sell it here. This will be your target. This right here will be your target. Okay, because why? The market was still bearish, and this right here was only an inducement. Okay, this was only an inducement. Okay, so something like
Yes.
that. So yeah, can you understand this scenario? I hope it's
Yes.
clear.
Yes.
Okay,
I do. I
yeah,
do.
okay, okay. And then yeah, same thing in a bullish market. Let's go through that quickly.
Hmm?
Okay, let's say we had something like this. Okay, so let's say we had something like this. So we had a stop hunt, a
So
breakout
this
structure.
is a strong low.
Yeah, that's a strong low. Okay, and then yeah, another break in here.
Hmm.
Let's say we had something like this. Now we have this low. Okay, higher high, higher low, and a higher high, right? This is what we have. This is just basic market structure. Now, if someone wants to enter the market, like I told you, what will they expect? They will expect a higher low and a higher high, right? This is what anyone will
Hmm?
expect. Okay, this is what
Yes.
majority of the traders would expect. So
Hmm.
even smart money traders, now what will they do? They will look for an odd block or something in here. Okay, they'll wait until price gets here with their stop loss below this. They'll try to buy it. Okay, and same thing with the supply and demand traders might tell you that there's the demand zone. Okay, or it's a drop base and a rally and everything,
Yeah.
but they will
Yes.
also do the same thing. Okay, but not only smart money and supply and demand traders, we have trend line traders that are
Yes.
expecting the same thing. Okay, expecting a retracement back into the trend line and an expansion to the upside. Okay, so now
Mhm.
they buy it here, stop loss here. Okay, this is what they would do. And not only them, like I told you, we have break and retest. Okay, support and resistance. Okay, we have break and retest, support and resistance, and who else? Since this low right here is a swing low, we have breakout traders. Okay, we have the breakout traders that are having their sell stops below that low. Okay, so now in this bit of price action, where is the most amount of liquidity? Right below that low,
Here.
right?
Yes.
Yeah, this right here is where the most amount of liquidity is. Okay, so we will not be looking for anything around here. We'll be looking for something below that. Okay, we will be looking for something below that. So this right here, once again, could be an order block, a breaker block, a rejection block, or else an imbalance. Okay, this could be anything. Yeah, but what makes it a high quality zone is the liquidity that is resting above that.
Yeah, okay.
Okay, this liquidity is what's going to make it a high quality zone. Okay, now what could happen is, yeah, the market might retrace, give you a breakout structure, then more and more buyers are getting in. Okay, might even respect that lower time frame point for a while, then another set of buyers are getting in, and then once enough liquidity is built up, what will they do? Okay, they will stop you out.
Yeah.
Okay, they'll start selling it so that everyone gets
can
stopped
I
out.
ask you something?
Yeah.
What distance do you take for between the liquidity and your POI?
In here, that doesn't matter. Okay, that doesn't matter because yeah, just a tiny little wick below this liquidity is also enough. Like this. Okay, this is also more than enough. Okay, like because some people will tell you it has to be a 10 pip sweep, a 20 pip sweep. No, like for me, like just a tiny little wick below the liquidity is still a stop point.
Yes,
okay,
because sometimes there's many POI.
Yeah, there's many POI. So remember, we will be looking for the closest higher time frame point of interest.
The closest.
Okay? The closest higher time frame one. Okay, not just a random 1 minute order block in here.
Yes.
No, first we start from the higher time frames. And also when I say the higher time frames, it can be from the weekly, daily, and the 4 hour. Okay, then weekly, daily, 4 hour, 1 hour. And if there's nothing on those time frames, then since we have no other option, then we go into 30 minute and the 50 minute. But remember, the lower you go, the riskier the trade becomes. Okay, the riskier the trade becomes. Okay, so yeah, the best thing to do is look into the higher time frames. Okay, and then yeah, now this might pull down, take out everyone that wanted to buy here. Now sellers are induced into the market in the form of sell stops. See that? Now sell stops are activated. Okay, sell stops are activated, and then what they do is they will quickly move price up. Okay, up, and then now, like I told you, some people would have thought that this right here was a breakout structure, right? Okay, some people might have thought this is a breakout structure. Now they might be looking for order blocks in here maybe to sell from, right? Okay, now what could happen is this might go here and break structure. Then more and more sellers are getting in and then back. Okay, everyone gets stopped out. Okay, so we will be focusing on this entry right here. Okay, the entry below the retail liquidity. Okay, below the retail liquidity. Okay, so now remember, a high quality point of interest. Okay, a high quality point of interest will always have liquidity above it. Okay, we'll always have liquidity above it, and in this case below it. Okay, so remember that very well, above and below it. Okay, so this is what we call a high quality point of interest. Okay, so can you understand this? I hope it's clear.
Yes, I do.
Yeah.
So the obvious order blocks are not good.
Yeah, not good. Okay, not good. Okay, see, even today, where did this move come into? Where did this move come into? Into the rejection block.
Yes.
See that? Into the rejection block. Like, yeah, I had a very clean entry on gold that dropped almost 200 pips today. See, look at that. Okay, because I told you a higher time frame order block, a high time frame rejection block is a lower time frame order block, right? What did we have on the 4 hour? An unmitigated wick, the base of the wick. See that?
Yes.
The base of the wick is unmitigated. And if you go into a lower time frame on the H1, this is an order block. See that? This right here is an order block. Okay, the last push up before the push down. And we have all this trend line liquidity being fed into that level.
Yes.
Can you see that? Tap right into that. Tap right into that and look at the sell. Okay, how many pips is this now?
Oh, yeah. Huge.
190 pips. 190 pips. Okay, and look how quick the move is. Look how quick the move is, like melted. Like melted. Look at that. No drawdown, basically. Okay, just started melting. Okay, just started melting. So liquidity and all of this. This is very important. Okay, this is very important. So yeah, that is how we can use maybe a rejection block and everything. Okay, so can you understand that? I hope
so. So here the liquidity was the little wick, the little equal height. Yes.
This right here. This is actually the most important type of liquidity. This is an Asian high.
This is
okay. Let's talk about
Asian range.
Yeah. Okay, let's talk about Asia now.
Yes,
Okay,
yes.
because Asia is very important, and you're from Paris, right? So you can easily trade London. Okay, you
Yes,
can
I do
easily trade
London
London.
and even New York.
Yeah, but focus on one single setup. Okay, one
Okay.
consistent setup. Okay, because
Yes.
just one setup a day, that's more than enough for you. Okay, that is more than enough. So
Yes.
yeah, I'll show you a very consistent setup that plays out during London. Okay,
Yes.
almost
Okay.
90% of the time. Okay,
Okay.
almost 90% of the time. Okay, so I'll show you. Now, Asia is actually the most important session of all. Okay, Asia is actually the most important session of all because most people will focus on London and New York, but no, Asia is very important. But like, even though it's important, we're not going to trade it. Okay, we're not going to trade it. Like, Asia is like the guide to an intraday trader. Okay, Asia is the guide to an intraday trader. Now, you'd have seen that Asia does not move a lot, right? Asia will
Yes.
just mess
It's
around.
ranging.
Okay, Asia. Yeah. Okay. Asia will just mess around. So something like this is what happens. Okay. So remember, Asia ends at the New York midnight time. Okay.
Yes.
Asia ends at the New York midnight time because why? It's an algorithm that runs the market. Okay. It's an algorithm that runs the market. So that algorithm basically resets at New York midnight time. Okay. That is when the algorithm resets. Okay. So Asia ends at that time because after that time, new liquidity, new traps and everything will start building up. Okay, we start to build up. Okay, so that
Okay.
is what would happen. Okay, give me a second. I think gold started melting. Let me take some partials quickly. Yeah.
Let's go. Let's go.
Give me 1 second. I'm taking
Yeah, no
partials here.
problem, man.
Yeah. Okay. Yeah, it's shooting down. Perfect.
You trade only gold and GU?
Yeah, I trade only gold and GU. Okay, because just one or two pairs are more than enough. Okay, that's more than enough because you don't have to take out every one of these pairs in here and then just mess up your mind. No. Okay, just one or two pairs is more than
Yeah,
enough. See,
it distracts.
250 pips. 250 pips. Look at the move. It's crazy.
Yes, nice.
Okay.
You coach this one.
Yeah, I caught the sell
Oh,
from here.
oh, nice.
Like I even had the buy from here. I'll show you. Okay,
Oh,
a
nice.
buy and then the sell. So for the buy, the target was this, and the sell, the main target was down here. So yeah, major partial is taken now. Okay, I'll show you where the buy came from. It was crazy actually. Okay,
Okay.
but yeah, now let's focus on this Asia. Okay, now what happens is Asia, okay, is like the guide to an intraday trader, like I told you. Okay, Asia is the guide to an
Yes.
intraday trader. Okay, so because what happens is now there's a set of traders who will be placing their buy stops above Asia and below Asia. Okay, sell stops below Asia because what they're expecting is in case if price runs above the Asian highs, they're expecting a bullish day. Okay, they are expecting a bullish day. And same
Yes,
thing,
yes.
if price runs below the Asian lows, they're expecting a bearish day.
Bearish.
Okay,
Yes.
so yeah, they are expecting moves like this. So what they do is they have their buy stops above Asia and sell stops below Asia. Now, the institutions, they know that. Okay, they know that. So what they would do is, after the New York midnight time, which means after Asia is over, they might give you a false run in the opposite direction.
Yes.
Okay, a false run in the opposite direction. Why are they doing that? Like I told you,
Fake.
inducements. Okay, yeah, that fake move, okay, the false run in the opposite direction. They're inducing buyers into the market. See, buy stops are activated. Okay, these trend lines are forming. Everyone starts to buy this, but with London open, they will reverse. Okay, they will reverse. So this will be that very consistent setup that I told you about. Okay, very consistent. Okay, so we will be looking for a point of interest above Asia. Now, don't worry, we will not do this alone. Okay, we will not do this alone. We will be like combining everything, trading ranges, market structure, everything into this, timing and everything. Okay, so then it will give you a very solid foundation. Okay, so this, what makes this a high quality point of interest is the Asian highs liquidity being fed into that level. Can you see that?
Okay,
this liquidity is what makes this a high quality zone. And once again, this will not be a random 1 minute order block. Okay, no, it will not be it will not come from a lower time frame. Okay, we're not going to look at the lower time frames first. We will be looking at the higher time frames. Okay, higher time frames, and then we will be looking at the lower time frame if there is no other option. Or else what you could do is you could wait until price gets here, wait for a lower time frame break, and retest it. Okay, you can even get something like this. Okay, because then that way it's safe. Yeah.
Does this work if you wait for a little break of structure in a M1?
Yeah, even if you wait for the lower time frame, yeah, even if you wait for a 1 minute break of structure, you can get the entry. Okay, so
Yes.
you can even do that. Yeah, because confirmation entries are always better. You know that, right? It's
Okay,
always better.
okay.
Okay,
Because
yeah. So you can even do that. Yeah.
sometimes we never get this and price just goes.
Yeah,
So
sometimes. So I'll show
yeah,
you. Okay, now
yeah.
there are like three
Okay,
major setups. Okay, like yeah,
okay,
almost three
okay.
major setups that happens during Asia. Okay, now this right here will be one. Okay, this right here will be one. So according to ICT, this is what he calls the, yeah, if you know that, this is what
Judas
he calls
swing.
the, yeah, the Judas swing.
Yeah, I
Okay, the
saw
Judas
this.
swing.
Yeah.
Yeah, that has a deep meaning behind that. Okay, the Judas swing has a deep meaning. It's like he tells you like it's like taking the sheeps into a slaughterhouse. Okay,
Yeah.
taking the sheeps into a slaughterhouse. See, everyone starts to chase the move, but when the time is up, everyone's dead.
Yeah.
Okay, that is what
And
happens. Okay,
it's the
so
eye of the day.
yeah, that's the high of the day. Okay, you can
Yes.
even get the high of the day very
Mm.
easily. Like even
But
even on gold today, we have the high of the day. Okay,
yes, on
like
gold. Yes, yes.
yeah, on gold, we have
But
the high of
one
the day.
question.
Yeah, yeah.
Does the Asian range has to be equal highs or something
Nah,
or
it doesn't have to be.
no?
No, it doesn't have to be
It's
like that. No,
always
it could be
liquidity.
anything. Yeah, it is not always. Okay, yeah, let's talk about this once again. Okay, not always. Okay, it's not always liquidity. Only sometimes. Okay, but most of the time it is liquidity. Okay, it
Yes.
is liquidity. But yeah, this is the first example. Okay, you understand that, right? This will
Okay,
be the
okay, okay.
first one. Yeah, and then same thing. Okay, same thing. The second one. Okay, now if it runs below the Asian lows, what would happen? Everyone will be expecting a bearish day, right? Everyone will be
Yes.
expecting a bearish day because their sell stops are below that low. Okay, maybe these trend lines are forming and everything happened. Okay, so everyone starts to sell this thing. But when
Mhm.
London opens, they will reverse. Okay, like might even give you a reaction here and then boom.
Okay.
Okay, reverse.
Yes.
Everything will start. Yeah, everyone gets taken out.
Huh.
So we will be looking for a point of interest in here. Okay, we'll be looking for a point of interest in here. Can you understand it? Okay, so this is what we
Yes,
would
yes.
do. Okay, this is
Okay,
what
okay.
we would do. So once again, not just a random lower time frame order block. Okay, it has to come from a higher time frame point of interest. Okay, it has to come from the higher time frames. Okay,
Yes.
remember that too.
Okay.
So then this will be the second one. Okay, this will be the second setup. And then the other one. Okay, what if Asia does something like this? Okay, what if Asia does something like this? Okay, what if Asia does something like this? Let me mark it out. Let's say this right here is Asia.
Asia
Now
does a
this day,
strong low.
exactly. Yeah,
Mm.
Asia is a strong low. See that?
Yeah.
Top hunt and a breakout structure. Now this day, like, does it make sense for you to wait until the Asian highs get taken out and sell it and target this low? No, because why? Asia is strong. Okay,
Yes.
Asian low is a strong low. So this day you can't expect that. So instead, now what? Now in the previous examples, what we expected was, what we expected was a reversal, right? We
Mhm.
expected a reversal above Asia, but this day we're going to expect a continuation with Asia.
Yes.
Okay, a continuation with Asia. Now the thing is, now you can even sell it if price runs above the Asian highs, but remember, exits are more important than entries. Okay, exits are more important than entries. So you can take the
Yes.
sell here, but you're not going to target this low. Okay, so because it will
Yes.
not get there. Okay, it will not get there. So if you're not going to get that, the best thing to do is, okay, the Asia will always, like, if it's a strong low, most of the time, I'm not saying always, most of the time it will come back into the Asian midline. Okay, the
Yes.
Asian midline. It
Mm.
comes back into the Asian midline, and then it starts to go up like this. Okay,
Okay.
or else, now as soon as Asia ends, a new 4-hour candle will open, right? Okay, a new 4-hour candle will open. Okay, like you would have seen that. Okay, yeah, because candles are very important. Okay, focus on that too. Okay, the opening and closing prices of candles. Now as soon as Asia ends, a new 4-hour candle will open. Okay, so that 4-hour candle, most probably it will turn into the last push down before the push up. So what is this? The order block, right? Okay, the
Yes.
4-hour candle will turn into the order block. So London usually retraces back into that 4-hour candle and then goes back up. Okay, so I'll show you. Okay, I will show you examples,
Yes.
don't worry. Okay, but
Because
yeah,
London is 4 hour after Asian.
I think so. Let me see. Yeah, okay, yeah, it is 4 hours after London.
Okay.
Okay, yeah, it is. Okay,
Okay.
then yeah, then it might come back into the midline, or as this, the midline is only for extra confluence, and then it starts to go up. Okay, so
Yes.
something like this. So if
Okay.
Asian low is a strong low, we will not be expecting the low to get taken out. We will be expecting continuations. Okay, we'll be expecting continuations. Can you understand that? Okay.
Can I
Yeah.
ask you something?
Yeah.
The strong low of the Asian range.
Yeah.
What time frame do you take I mean, if it's a M1, it's not good, right?
Not M1. Okay,
No,
not
not.
M1.
It
Yeah, not
it has
M1.
to be
Okay,
at least M15 or something,
at
right?
least, yeah, exactly. Okay,
Yes.
at least M15. Okay, at least
Okay. Okay.
M15 because M1 is crazy. Okay, don't focus on
Yes.
the M1. Okay,
Yeah.
the M1 will give you so much false information. Okay,
Okay.
so yeah.
Okay. Mm.
Now let me show you. Yeah, before going into trading ranges, let me show you. Okay, so Asia. Let's see what Asia did. Yeah, today. Where did now this is London Open, this is London session. Where did London come into? Okay, I told you. Now this day Asian low was a strong low for now, right? See,
This is today,
liquidity
right?
taken out. Yeah,
Yeah,
this is
yeah.
today.
Okay.
Okay,
Okay.
liquidity taken out, and then
Yes.
structure has been broken.
Yes.
Strong low, right? Strong
Mhm.
low. So I told you a new 4 hour candle will open and close, right? A new 4 hour candle will open and close. So let's check the 4 hour. What do we have in here? An order block. Can you see that? The last push down before
Yes.
the push up. Okay.
Yes.
So then mark it out like this. Okay, because like we're not gonna mark out the whole thing like the other smart money traders. No. Okay, because
Yes.
remember, if the wicks are longer than the body, you can mark it out from the body of the candle. I normally always mark it out from the body of the candle because the body is where the volume is. Okay, the body is where the volume is. So I
Yes.
normally mark it out from the body of the candle. Okay, so remember, because why? An order block is a price level. Okay, it is not a candle, it is not a zone. An order block is a price level. Where did the sell start from? From here, right? This is where they
Yeah.
open. So
Yes.
that price level is what we are looking for. Okay, and then let's see if it came into this. I think the Asian midline was also there for extra confluence. Yeah, see that? The Asian midline was also very close to that.
Yes.
Let's see if London came back. Ah, there you go. See that?
Oh,
This
nice
was
one.
London. Okay,
Oh,
this was London. So if
yes.
you bought it here, okay, if you bought it here, yeah, because due to spreads, you will anyway get activated. Okay, because you will not be having it like this itself. You have to always factor in the spread. So if you factored in the spreads, you will get activated. Let's say maybe 3.2 pip stop loss, and you targeted the Asian high. The previous, not previous day. This was the, I think this was Monday or last Friday's Asian high. So
Ah,
you
yes.
have a nice setup.
Okay.
See, a very clean setup. So that's it. Like now, don't think, okay, now I was wrong. Okay, we were completely wrong because why? It was a bearish day. Okay, who cares? You made your money. Who cares
Oh,
if it
yes.
was a bearish or a bullish day? Okay, no one cares. Okay, so don't think
Uh-huh.
of it that way. Okay, yeah. And yeah, even in here, see this? Asia falls run in the opposite direction. So this is the Judah swing.
Mhm.
Okay, this right here will be the Judah swing. Everyone starts to buy this. Look at how these trend lines and everything is forming.
Yeah,
London
liquidity.
Open, bam. Okay. Now, most people will be wondering, okay, now look at this. They will think we have the Asian high in here. Okay, we have the Asian high in here. This is where Asia ended.
Mhm.
Now they will think, okay, since the Asian high was here, this is the high probability order block, right? They'll think this is the high quality order block, and then they'll try to sell it here.
Ah, yes.
What happened?
Liquidated.
Wicked above that. Yeah, they got stopped out.
Yes.
Why
Yes.
did that happen? I
Be
told you,
because
first
everyone
look
is
into
here.
the higher time frame. Yeah, not only that, look into the higher time frames. Just now remember, this is where the Asian high is.
Hmm?
Okay. What did we have on the daily? What is this? An order block.
Order block. Yes.
The last push up before the push down. Draw a horizontal line. Okay.
Mm.
See that? Like this is why I told you, like the way we look at points of interest will be very different. Okay, will be very different. And now look at this. Now, what would you rather trust? Okay, a daily point of interest or as a 15-minute?
Oh,
Obviously the
yes.
daily, right? Okay,
As a
obviously the
daily.
daily. And
Of
then yeah,
course.
you let this go. You let this go. Now, some people will call this maybe a smart money trap and
Yeah.
everything because why? A
Yes.
very clear order block, right? Or
Oh, yeah.
most people will try to sell it from here because why? This is the supply that broke the structure.
Yes.
That is what you get taught, right?
Yes.
The supply that broke structure. That is the
The
most
flip
important
zone.
one. Okay, yeah, the flip zone and everything. So
Mm.
now what they would do is they'll try to sell it here.
Oh, yes.
Okay, they'll try to sell it here, but for us, that is also liquidity.
Yeah.
Okay, that is
Okay.
also liquidity, and then we will be selling it from the daily. Okay, don't worry. Once we talk about trading ranges, okay, you will anyway understand what this is. Okay, and then let's
Mm.
say stop loss was somewhere around here, 3.6 pips, and we target the Asian lows.
And
Okay,
how do you know price will not go higher in the POI?
now this is the daily zone. Okay, this right here is the
Eh,
daily zone. There's no
Yes.
point of going anywhere around here once again, right? There's no point of doing that because why? This was also a strong high. Stop hunt,
Ah, yes.
breakout structure. Can you see that?
Yeah.
Stop hunt,
I mean,
breakout structure. Yeah.
I mean going higher, but in the white candle.
This like going above this. How do we know it's not going to
Yes,
go above
yes,
there? Okay, now
yeah,
first thing is it is a strong high, so we are anyway not expecting price to get above this high. So that's why I
yes.
told you the safe place for the stop loss is above that high. But anyway, you don't want 8.7 pip stop loss, right? Okay, we don't want
Yes.
that. So then what you could do is you can even refine it to some lower time frame. Okay, you can even refine it to some lower time frame. If you really want to play it safe, you can have it
Yes.
somewhere around here, because even if they feel that imbalance, you are safe there.
Ah,
See that?
yes, yes,
Even then
yes.
you are safe. Okay, but yeah, normally what I would do is once the higher time frame zone is here, okay, I'll just do something like this, just an imaginary stop loss. Okay, this is what I would do.
Okay.
Okay,
Okay.
yeah. Then let's see. We're expecting price to get here by, let's see, the London kill zone like this. Now everyone else will be marking this out
Yes.
and expecting sales from here. Okay, so then what happened? This is all we need. Okay, there we go.
Inducement.
During, yeah, that inducement taken out. London opens at 12:30 for me. Okay, London for me it opens at 12:30 p.m. Look at the time when it got tapped in, right at 12:30. Okay, right at 12:30, and then
Oh, yes.
yeah, here comes the drop.
So
That's
it's
it.
London Open.
Yeah, London
Yeah.
opens at 12:30 p.m. for me. Okay, that's my time. Okay.
Okay.
And then, yeah, let me show you. You could have even, if you missed the sell, you could have even taken a buy. Okay, you could have even taken a buy. Where? From the Asian lows, right below the Asian lows. What did we have? Okay, first thing is we had a strong low on the M15. See, stop hunt of a swing low,
Yes.
and a break of market structure. Strong low. This came and tapped into the strong low, started going up. Now the money might be here. We had the Asian low in here. Right below the Asian lows, we had the 1 hour rejection block. Can you see that?
Yes.
Okay, we had the 1 hour rejection block. Now you can buy it here. Stop loss can go below that. See, from the 1 hour, we only have 3.1 pips. Okay,
Yes.
and then there we can target all these highs up here. Okay, so let's see what happens. There we go.
Oh yeah, nice one.
Yeah, see that?
But
I was
can
messing
I ask
around
you,
because yeah.
we could think this entry is placed on
Yeah.
on weak low.
Weak low? No, this is not a weak low. Okay, this
Because
is not a weak low because why? This came back down and
yeah.
actually tapped into the strong low once. See that? So which means they tapped into the order block. Now the money is in here. See that? The money is in here. And also, I told you what makes an order block high quality. Okay, what makes a point of interest high quality? Liquidity above it. See that?
Yes.
Now we have the Asian lows liquidity right above this point of interest.
Yes. Okay.
See that? Okay,
Yes,
that is
yes.
what made it a high quality zone. Okay, then see a sell to buy, a nice sell to buy scenario.
This is what we call order flow, right?
Yeah, you can call it order flow in okay,
Yes.
anything, but you understand the logic behind it, right? That is more than
Yes.
enough. Okay, yeah.
Okay.
So we had that, and let's see what happened this day, maybe. Yeah, even this day, where do you think this came into? Okay, look at this. First of all, Asian high was a strong high, right? See, liquidity taken out, structure broken. Structure broken. Now, will you be looking for sales from here? No, because why? Almost equal highs, relatively equal highs. Can you see that? Liquidity. Okay, that we call it internal range liquidity. You can call it an inducement or anything. And above that, what did we have? See, this is where the liquidity is. And above that, once again, the base of the wick.
Oh, yes.
See that?
Rejection block.
Yeah, the rejection block. That is unmitigated. Okay, then what we could do is sell it from here.
Yeah.
Okay, from the rejection block. Your stop loss can go, let's say above this high, only 3.3 pips. We place it above that high. See that? Okay, only 3.3 pips. And we target these lows. Okay, then let's see what happens. Now, there we go.
Oh, yes,
done.
nice.
Okay, you're done for the whole day. Okay, that's why I told you, like, we don't have to go into lower time frames all the time. Okay, we don't have to go into the lower time frames all the time. And even this was actually New York. Okay, this was actually New York. The buy came during London. This was during New York. Okay, so we could have played the continuation with New York. And then even this day, where did this sell come from? Okay, where did this sell come from? We had Asia. Okay, we had Asia in here, right here, and right above Asia we had an imbalance. Can you see that? Okay, we had an imbalance. That's why I told you the point of interest differs depending on where the liquidity is. Okay, so we have that, and we target the lows. Stop loss can go above that, 3 pips. What happens? Goes up, and there we go.
Oh,
Okay?
yeah, nice.
Very consistent. Okay, very consistent. If you targeted
Okay.
this low, you're done for the whole day.
So
okay, see now, I showed you the same setup every day now. Yeah.
This was also a London Open.
This was also London Open. See, right
yes.
at London Open. Look at the time.
Yes.
Right
yes,
at 12:30.
Nice.
Right at 12:30.
Yes, that's
okay.
nice.
Yeah. Let's see this day. This day. Let's quickly check where it came into. No, not there. Let's check page 1. Yeah, let's talk about that once we get into trading ranges. Okay. Once we get into trading ranges, I'll tell you where this came from. Okay, because we call this internal range liquidity, and this was the high time frame point of interest. So you could have even easily taken this buy. Okay. And yeah, even in here, this came into, I think, the H1 rejection block. This was the M15, but it came into the H1. See, London Open. Look at the timing. 1 p.m.
Yes.
Half an hour after London Open. Okay, so 1 p.m.
Yeah.
So we had that. Let's see. This day, where did it come into? Yeah, Asian high wasn't even a strong high, but they failed to take it out, and they came into the Asian midline. See that? Right back into the midline, and then they started dropping.
But this was a strong low, a strong high that was taken here.
I have no idea. Which one? Which one? This one? This?
No, this one, yes, in the Asian range.
Actually, we had this as a strong high. Can you see that?
Ah, yes, yes.
Oh, yes. Stop hunt. Yeah, I just saw it, honestly. Okay, a stop hunt and a breakout structure.
But the one that this one, yes, that's a strong high too, because it took liquidity, right?
This one? Yes,
no,
this is a strong high.
No, the one at the left. Oh, sorry, my English is not good.
Yeah, that's okay. Yeah, if you could annotate, it would be better. Yeah.
You think I can do something with my mouse?
Yeah. See, like if you tap the top of the screen, you can see something like a pencil tool, I guess. Yeah.
Let me search.
You might have a pencil tool or something.
Oh, I don't get it. What? Oh, never mind.
No?
Never mind.
Okay, so which high were you talking about? This?
Where you draw the line of liquidity?
This?
Yes, this was
this high?
This high is a strong high, right? No.
This high? No, this high is not a strong high because why? No swing high was taken out. Can you see that?
No swing.
Yes. No swing high was taken out. Did you see that? Okay, so it cannot be a strong high, right? Okay, then it cannot be a strong high.
Yes, okay.
Yeah, you understand that, right? Okay, then it cannot be a strong high. Okay.
It's okay.
So then this was liquidity. Even this right here was liquidity. Came right back into the midline, and then it started dropping. Okay, could have been a nice trade if you sold it here from the midline, and you targeted this low, just one candle. Okay, right into profits. We have that. Even this day, where do you think this came into? Higher time frames. Okay, look at all this pool of liquidity. Look at this. Liquidity, right?
Oh, yes, a lot of liquidity.
Above that, what did we have? The 4-hour imbalance.
Yes.
Okay, and you could have even refined it into the rejection block. Can you see that in here?
Yes.
Okay, only a slight refinement. Okay, we're not going to refine this imbalance into up here. That is too much. Okay, no, just a slight imbalance, a slight refinement like this. See, only 1.6 pips. Okay, we can do that. And then what we do is let's say we set our sell limits here, expecting price to get here by London Open, or as the London kill zone at 11:30. Okay, so those are the times that we will be active in the charts. Okay, remember that too. London kill zone to London Open. Okay, those are the times where we will be active in the charts.
What is London kill zone?
London kill zone is actually the Frankfurt session. Okay, the Frankfurt session. Okay, yeah, it's the Frankfurt session. Okay, so ICT cost is the London kill zone. Okay, we can also call it the London kill zone. Okay, so like this, let's say a stop loss was, let's go into a lower time frame to check where we can place a stop loss. Yeah, we had a candle in here. Let's say we had the stop loss above that. Actually, the stop loss placement is completely up to you. Okay, it's about how you want to place it. Okay, it's about how you want to place it. So that's okay. And then look at this trend lines and stuff. Can you see that? Yeah. Okay, we can target that. Then let's see what happens. Okay, there we go. Yeah, this happened early. Yeah, this happened a little bit early, but let's see.
Oh,
There comes the drop. Okay, you could have
nice
even
drop.
taken the buy here. Okay, you could have even taken the buy here. Let me show you. Let's
Yes.
say you target the Asian lows. Let's say you target the Asian lows. I actually had the buy. Okay, what is this? Equal lows,
Yes.
right? And
Liquidity.
below that, what did we have? H4 rejection block.
Yes.
See that? Buy it.
Okay.
Stop loss below the rejection block. See on the 4-hour time frame, but your stop loss is only 3.6 pips. See that from the 4-hour.
Oh,
Okay,
yes,
only
nice.
3.6 pips. Yeah,
Yes.
from the 4-hour itself, you have only 3.6 pips. See, that's why I told you it's a price level. Okay, it is a price level. See, now, do you think if you post a screenshot like this, people will have any idea what this is? No, right? What is that line? No idea. Okay, because they are not even looking at the higher time frames. Okay, everyone will be so focused on the higher time frames. Okay, so we know that this is price level. If this is a price level, then what happens? Drops and goes up. See that?
Oh, yes, nice.
Okay, a nice buy, a nice little buy. This was actually London. See, like 2 hours after London. Okay, so a nice pimp on day. You could have taken the sell, you could have taken the buy, and you could have even taken another sell from here. I'll tell you that once we get into trading ranges. Okay, so you could have done anything. And let's see more. Yeah, this. Where do you think this came from? Okay, yeah, let's talk about trading ranges and I'll show you because it just keeps on happening. This Asia thing. Okay, the Asia thing, it just keeps on happening. This day it came into the midline. This day above the Asian highs, they sold it. Below the Asian highs, they bought it. And even in here, see, Asia falls, run in the opposite direction. London session, boom, starts to go up. Okay, this day, of course, I have no idea because that's okay. We're not going to expect this to work out 100% because if it just keeps on happening the same way every single day, then there will be no other jobs in the world, right? Everyone will start trading. Okay, so do not expect perfectness, but yeah, if you understand the logic behind it, that's more than enough. Okay, so see, even in here, Asia falls, run in the opposite direction. London open, look at the timing, 12:30 p.m. What happened? Oh, reverse.
Yes.
Okay, so even in here, Asia falls, run in the opposite direction. Oh, see that? Okay, this was actually the New York kill zone. This happened in New York kill zone.
Every day is the same thing.
Yeah, same thing. See that? Asia falls, run in the opposite direction. Boom. See, 3 perfect setups. Okay, 3 days, it's the same setup, same setup. Okay, so all you have to do is just figure out the point of interest. Okay, and this, where did this come from? This will be a very nice example of where the sell came from, where the buy came from. I'll show you. Okay, I did not take the sell. I actually got the buy targeting this high. I'll show you. Okay, I'll show you where it came from. But before that, let's talk about the trading ranges. Okay, because yeah, just give me 1 second. Before that, I'll have some water and come. Okay, just give me a second.
Yes, no problem. I come back too. Yeah, it's good.
Okay, now let's talk about trading ranges. Okay, because yeah, trading ranges will be very important. Okay, very important because like me personally, I use the trading range to get the bias and everything. Okay, because yeah, I'll show you. Okay, now the importance of a trading range is like something like this. So let's say, okay, for this is just a random example, but yeah, this was even a nice setup. Let's say our trading range, okay, our trading range was from here to here. Now, the only thing that you focus on is what's happening inside of this range. You don't care about what's happening in here. You're not going to scroll to the left and look for what's happening in here. No, the only thing that you're focusing on is what is happening inside of this range. You don't care about what's happening in here. You're not going to scroll to the left and look for what's happening in here. No, the only thing that you're focusing on is what is happening inside of this range. You don't care about what's happening in here. No, the only thing that you're focusing on is what is happening inside of this trading range. So if you are looking for a point of interest, you'll be looking for a point of interest only inside of the range. If you're looking for liquidity, you look for liquidity only inside of the range. Okay, so that way it will give you a lot of clarity. Okay, because you only have a little bit of price action to work with. Okay, so it will give you a lot of clarity. Okay, so let me show you. Now remember, a trade in range will always start from a strong high or a strong low. Okay, a trade in range will always start from a strong high or else a strong low. Okay, so let's say something like this. Okay, let's talk about a bullish market. Let's say we have something like this. Okay, because yeah, this will be very important. So make sure you understand it. So let's say we had a stop hunt, a breakout structure, and let's say our range is from down here. Yeah, let's say our range is from down here to up here. Okay, let's say this right here was a trading range. Okay, just a random example. I'll give you the confirmation like how to know that a trading range is created and everything. Okay, but for now, just to understand, this is what would happen. Okay, so let's say our trading range is from here to here. So the first thing we do is, once we identify the trading range, the first thing we do is we look for discount and premium prices. Okay, we look for discount and premium prices. Okay, so remember, a high quality bullish point of interest has to always come from the equilibrium. Okay, from the equilibrium or else anything below that. Okay, anything below that. It has to come from the equilibrium or else anything below that. Okay, so we will not be looking for a point of interest on a premium price to buy. Okay, we're not going to do that. We're not going to do that. We will not be buying from a premium price. We'll be only buying from somewhere around here. Okay, somewhere around here. So let's say we mark that out and the market started retracing. Let's say this started retracing. Okay, so what is the reason for the retracement? Now you know the first reason, that is to get into a discounted price. Okay, to get into a discounted price. And the most important reason is to take out the internal range liquidity. Okay, that is to take out the internal range liquidity. So which means the liquidity that is resting inside of this trading range. Okay, the liquidity that is resting inside of this trading range is what we call the internal range liquidity. Okay, that is what we call the internal range liquidity. So what is that liquidity? The swing lows that are inside of this trading range. Once again, that three candle formation. Okay, that three candle formation is very important. The swing lows that are inside of this trading range is what we call the internal range liquidity. Can you understand that? Okay.
Yes.
Or else remember, a drop in a bullish market is a hunt for sell stops. Okay, a drop in a bullish market is a hunt for sell stops. So where are the sell stops? Sell stops are below swing lows. Okay, so they drop down, take out all these swing lows, and then they're like this. And then after taking out the swing lows, what will they do? They start going higher. Take out the external range liquidity. Okay, from internal range to external range. Okay, so enter at internal range liquidity, exit at external range liquidity. Okay, something like that. That is what we're going to do. So this is why the market will do something. And also, like sometimes people will be expecting retracements into these areas, but like into the 50%, the 61.8, but that never happens. They will do something like this. So let's say, okay, let's say something like this. Price might get here, do this, and then go out. Right? You have seen situations like this too. Okay, situations like this can happen too. Okay, now why will that happen? Because let's say inside of the lower time frame point of interest, we will always be looking for a higher time frame. Inside of the lower time frame trading range, we will be looking for a higher time frame point of interest. Okay, now if this is a 1 hour trading range, we will be looking for a 4 hour or the daily point of interest inside of the range. Okay, if it is a 4 hour range, we'll be looking for a daily or a weekly. Okay, if it is a 50-minute range, we'll be looking for the 30-minute, 1 hour, or the 4 hour, something like that. Okay, that is what we will be doing. Okay, so now let's say this was a 4 hour range and we had a daily point of interest in here. Okay, let's say we had something in here. Now maybe this liquidity is being fed into the daily point of interest. Can you understand that? Okay. Now what could happen is, let's say price moved down and it did this, gave you that breakout structure. Now, anyway, we are bullish, right? Okay, so to understand the direction, to get the direction, you have to always focus on the major breakout structure, the major breakout. Okay, because that is where the market wants to go. That is the direction. Okay, the breakout is the direction. The major breakout will be your direction. Okay, so now see this. The major breakout is the major trend. Okay, the pro trend. This is what we call the pro trend. Now, the pro trend is bullish, right? The pro trend is bullish.
Yes.
Now, after getting into a discounted price and taking out some internal range liquidity, the counter trend, this is what we call the counter trend. The
Yes.
counter trend has also turned bullish. See that? Now,
Yes.
if the pro trend is bullish and if the counter trend is bullish, then we know that the range expansion has started. That is what we call the range expansion. Okay, so they will go out of the trading range quickly, like this. Okay, so if both the trends are bullish, if the major trend, if the counter trend, if both are bullish, then what happens is they will the range expansion will start and then they will quickly move out. Okay, now after you get this bullish breakout structure, there is no point of waiting for this internal range liquid to get taken out. Okay, so like some people will try to sell it from here and then they'll get stopped out.
Yes.
Okay, they'll get stopped out. Don't do that. Okay, just go with the flow. If both the trends are bullish, okay, you know that, yeah, the range expansion has started. Okay, it will quickly move out like this. This is what would happen. Can you understand this? Yeah.
Yes.
Okay.
Yes,
Once we get into charts, you will understand it even better. Okay, so let me show you.
Man.
And then again, how do we confirm a trading range? That is very important. Okay, how do we confirm a trading range? So let's say it came into a discounted price and gave you this. Okay. Now, as soon as you have this breakout structure, you're not gonna mark this out as the low of the next trading range. You know, okay, you're not gonna mark this out as the low of the next trading range. Okay, because why? For this to be confirmed as the low of the trading range, it has to break out of this high. Okay, it has to give you that major breakout structure, or else a higher low is only formed after it breaks out of the previous higher high. Okay, remember it that way. Okay, so let's say it came into a discounted price, turned bullish, and then only once you get this breakout structure, you can confirm that this is the low of the next trading range.
Okay.
This will turn into the next strong low. Okay, how do we know the low has created the high of the trading range? That is the most important thing. Okay, wait for the counter trend to turn bearish. Like this. Okay, a swing low that created a higher high has to break. Okay, then from here to here is your trading range. Then what is this? Internal range liquidity.
Yes. Okay.
Okay, then what could happen is they might drop down, take that out, and then boom, like this.
Okay.
Okay, so this is the reason why you get retracements. Okay, this is the reason why you get retracements, to get into a discounted price and to take out the internal range liquidity. Okay, so this breakout structure, this is very important. Okay, now a break like this cannot be taken as a break. This is not a breakout structure. Okay, this is not a breakout structure. Remember that very well. Okay, you have to get a break of a swing low that created a higher high. Okay, a low that created a higher high.
Yes.
Break like this. Okay, so always remember that. Okay, always remember that a swing low that created a higher high has to break. Okay, that is what would happen. Okay, so remember that. Okay, now in order for you to confirm the low, it has to break above a high, and for you to confirm the high, it has to break below a low. Okay, take it that way. Very easy, but the trading ranges are very, very important. Okay, very important, because if you identify, because the only type of liquidity is internal and external range liquidity. Okay, because everything is happening inside of a trading range. Okay,
yes.
So if you understand the trading range properly, you can pick, like right away, you can pick out the correct POI. Okay, at least 90% of the time you can pick out the right point of interest if you identify the trading range properly. Okay, so that is how a trading range is created. Okay, that's how a trading range is created. Can you understand that? Yeah, I hope it's clear.
I have a little question.
Yeah,
did you learn this from ICT too?
Yeah, I learned internal and external range liquid from ICT, but this I backtested and came up with this on my own. Okay, I didn't learn it from anyone else. Okay, nice. So yeah. So another thing is something like this. Okay, so let's say same thing in a bearish market. Okay, same thing in a bearish market. Okay, so let's say okay. Now, what is the first reason for the retracement? Okay, that is to get into a premium price, right? That is to get into a premium price. Okay, because now it's like a normal market. What would you do if you want to sell a product? Okay, you're going to wait for the price of that product to increase, right? You're going to wait for the price of that product to increase. So same thing in here. Okay, you're going to wait until the prices increase. Okay, so which means above the 50%, above the equilibrium. Okay, so let's say it started going up. Okay, what is the next reason for this retracement? That is to take out the internal range liquidity. Yeah. Okay, so which means the buy stops that are within this trading range. Okay, the buy stops that are within this trading range. Okay, the swing highs that are inside of the trading range. So remember, a bounce in a bearish market is a hunt for buy stops.
Yes.
Okay, it is a hunt for buy stops. Then it moves up, takes out those buy stops. And once you get this breakout structure, now see this, the major trend is bearish, the counter trend is bearish. So which means the range expansion, right? The range expansion. Why do we call this the retracement? Because why? The major trend is bearish, the counter trend is bullish. Then it is a retracement. Then it is a retracement. But when both the trends are bearish, we call it the expansion. So this will quickly move out of the trading range like this. Okay, so this is what would happen. And also, yeah, do you have any questions? No, right?
No, it's okay.
Okay. And also, how do we confirm a trading range? Okay, how do we confirm a trading range? So let's say it got into a premium price and turned bearish. Okay, now are we going to mark this out as the high of the range right away? No, we can't do that. Okay, we can't do that because why? The trading range is only confirmed after it breaks out of this external low right range. Here. Yeah, only after it takes out external range liquid. So let's say it started dropping. Yeah, let me draw it out properly. Only once you get this breakout structure, you can confirm that this is the high of the next trading range. Okay, only once you get this break.
Okay.
But how do we confirm the low? How do we confirm the low? You have to get a bullish breakout structure.
Yes.
Okay. A swing low that, a swing high that created a lower low has to break bullish. Okay. Then from here to here is the trading range, because now what has happened? The main trend is bearish, the counter trend has turned bullish. Okay, so which means now they are in a run up for the internal range liquidity. Okay, now since price is fractal, you can even do this. Okay, since price is fractal, you can do something like this. Drop into a lower time frame after this bullish breakout structure. Now on a lower time frame, you're going to wait for something like this. See that? Now what's your trading range on the lower time frame? From here to here. Okay, now on a lower time frame, you wait until it gets into a discounted price. You buy it. Boom. Take your partials here. Leave the rest for the high time frame internal range liquidity. Like this. Okay, so you can buy it, you can sell it, you can do anything. But the main thing that you should understand is the trading ranges. Like that. Okay, so you can buy, you can sell, you can do anything. Okay, but can you understand this? Let me know. Yeah, about trading ranges. Okay, so this is how trading ranges are created. This is how it is confirmed. Okay, so now let's get into the charts. Okay, so let me show you. Oh, what is this? I have inverted. Okay, so let me show you some examples. Okay, it's a very nice example. So starting from here, yeah, see this? I told you a range will always start from a strong high or a strong low, right? That is what I told you. Now in here, what do we have? We have a strong low. See, a low that took out liquidity.
So you always take 1 hour to do this?
No. I'm just showing you an example. I'm showing you examples of trading ranges only. Okay, like I'll show you how to do. I'll show you how I do a top-down analysis and everything. Okay, I always start from the weekly. Okay, this is only to show you about trading ranges. Okay, that's it. Okay, yeah. So we have a stop hunt, a breakout structure, then this turns into a strong low. Right?
Okay, yes.
How do we know the low has created the high of the range? You have to get this right. A swing low that created a higher high has to break, right? Now in here, from here to here, who is the swing low that created a higher high? This one, right?
Yes.
See that? This is a swing low, that 3-candle formation. Okay, the swing low that created a higher high. Now, if the trading range has to get created, they have to obviously take that high out, the low out, right? So that turns into the internal range liquidity. And then once that gets broken, from here to here will be your trading range.
Okay.
Can you understand that?
Yes.
Okay, is that clear? Okay. Then right below that, you have the rejection block.
So you know it will be taken.
Yeah, we know it will be taken off because why? A drop in a bullish market is a hunt for sell stops.
Yes.
Where are the sell stops? The only place which sell stops is below this, because why? This is a strong low. We're not expecting that to get taken out. Okay. And then right below that, we had the rejection block. We refined it into the 1-minute breaker block. See that? We had a breaker block on the 1 minute in here. See the last up candle before the down move. That is what we call the breaker.
Oh,
Can
so
you see that?
the breaker is a bullish candle, right?
Yeah, the last bullish candle before
Y-
the down move, that is what we call
Yes.
the breaker. Okay, that is
Okay.
what we call the
Okay.
breaker. Okay, and then what we do is we buy it. Okay, we can buy it in here like this. Stop loss can go, stop loss can even go below this. Okay, but I don't want a 9.4 pip stop loss, so I
Yes.
had it below the 1 minute breaker. Okay,
Okay.
below the
Okay.
1 minute breaker. And where do we target? External range liquidity.
External, right? Oh, yes.
Okay,
Nice.
external range liquidity, and then drops. Look at that. No drawdown basically.
Nice one.
Right into the targets. Okay, right
Yes.
into the targets very easily.
Oh,
Okay, so in
nice.
here we did not look for a higher time frame point of interest below the swing low, because why? The point of interest was very clear, right? In here the point of interest was very clear, so that is why we did not look into that. Okay, now look at this. Now after this gets taken out, okay, you know that your next target will be after let's say we were somewhere down here. Now this day, after this low gets taken out, this was the internal range liquidity. Do you know that the trading range is created from here to here? Okay, now this day,
Yes.
okay, now are you going to think, okay, this is Asia. If it runs above Asia, it's going to be a bearish day. Now are you going to sell it from here? No, risky. Because why? After taking out the internal range liquidity, they are going for the external range.
Yes.
See that? That's
It's
why I told
bullish
you we
now.
have to combine everything. Yeah, we are bullish now. So
Yes.
expecting a sell from here is suicide. See that? You should
Yes.
not do that. Okay, you should not do that.
Yeah.
Instead,
Smart
what you
money
could do
trap.
is, yeah, smart money traps. Okay, so instead, what you could do is you could just try looking for buys. Okay, try looking for buys. So how could we have taken a buy? So let me show you. Okay, let me show you. Okay, so yeah, mainly when the sessions are opening, I stick to the 15-minute time frame. Okay, that is what I would do. So now in here, we have same thing, stop hunt. See that?
Yes.
And a breakout structure.
Oh, yes. Okay.
So this turns
this
into
strong low.
Strong low, exactly. Okay. How do we know the low has created the high of the trading range? A swing low that created a higher high has to break, right? So who is the swing low? Yeah, who is the swing low that created a higher high? This one.
Yes.
See that? The swing low that created a higher high. So which means this has to get broken, right? In order for the trading range to get created. Okay.
Yes.
Then below that, we look for a higher time frame point of interest. What did we have? We had the H1 order block. Can you see that? Let's check
we
the
have
imbalance
too.
Yeah, we have the imbalance too. Let's quick check. Yeah, let's mark out the imbalance too. Like this. Okay. Now look at this. Now, buying from the imbalance will be very risky because why? We have another imbalance in here.
Yes.
Can you see that? We have another imbalance in here. And like, what do you even have here? Nothing, right? Okay, there is nothing. So then what we could do is go back into the H1, take it to the order block itself.
You take the
body
higher
of the
time
candle.
frame.
Yeah, the higher time frame ones. Okay, see? Now we have the body of the candle in here. Okay, the body of the candle in here. And then we could even refine it into a little slight refinement into the imbalance.
Yes. Okay.
Can you see that? Okay, we can refine it into the imbalance. And then let's see what we had on the lower time frames where we can place a, yeah, we had a breaker on the 1 minute. Can you see that?
Yes. Yes.
In here, the last up candle before the down move. Okay, so we have that. Now what we can do is we can buy it. See, now the lower time frames will be very messy. Now you will think from here to here is the trading range after this break. Okay, then you will take this as the next strong low, and then you will expect a retracement here and then a move to the upside. See that? Risky.
Yes.
Okay, very, very risky. That is why we look into the higher time frames. Then we set our buy limits here, like this. Stop loss, let's say below, let's say only 3.8 pips. Let's say it's here because why? Anyway, our targets, our final targets are up here.
Oh, yes, nice.
See that? That is where the final targets are. Okay, that is where the final targets are. So let's say we bought it in here, like this, and then, yeah, there we go. Came right back into the imbalance, and then there we start to go.
Nice. Yes.
See that? Okay, so that was the London Open setup. That was the London Open setup. This right here. That's why I told you. Once you get the direction clearly, the entries become very easy. Because why is that? Why is that? Because there's only two things that you have to do in the market, right? You either buy or you sell. But if the direction is wrong, you pull the wrong one. Okay, you do the wrong thing. But if the direction is right, you only have to do the right thing. Okay, and since you know about internal and external range liquidity, your entries will become very easy. Okay, your entries will be very,
Yes.
very easy. Okay, so you can do that. So let's see. Okay, I'll show you more examples.
That's nice.
Yeah, look at this. Look at this thing in here. Okay, first of all, focus on the liquidity. In this bit of price section, look at all of this.
Yeah.
Look at this stacked lows. Look at this stacked lows. Okay, liquidity. Okay, we know that. Now the market will be heading down for that, right? The market will probably head down for all this liquidity. Okay, we know that. Right away, you can see how all this liquidity is getting formed. See that?
Yes.
Look at all this. Okay, look at all these trend lines and everything. So the magnet is down here, somewhere around here, right? So buys
Yes.
will be very risky. Okay, so if you are buying, we will only be buying it from a strong low. Okay, only from a strong low. Okay, so that way we are safe. So now first, let's say, go to 30-minute. Okay, let's say, see this stop hunt. Okay.
Yes.
Breakout structure.
Yes. Yes.
Then what is this? A strong low. Okay. How do we know the low has created the high of the trading range? We have to get a bearish breakout structure, right? So
yes,
here we have that break. Okay. So from here to here might be the trading range. Yeah, that is the trading range. But remember, once again, I'll show you why I told you that way, because we have to be flexible. Look at all of this too. Okay, look at all this liquidity. It's all this liquidity. So buys will be risky. Okay, so the buy will be only a counter trend buy. Okay, but from a strong low. So then from here to here was the trading range. What is the reason for the retracement? That is to take out the internal range liquidity.
Yeah.
Can you see that?
Yes.
Below the internal range liquidity, we look for a higher time frame point of interest. What do we have? The rejection block on the 4 hour. See that? Okay, that same example that I showed you earlier. And then we buy it, expecting price to get here by 12:30 p.m. or 12:30 is already here. Let's say, yeah, somewhere around here. Stop loss can go below the strong low. But remember, now we will be looking for sells, right? We will be looking for sells more, because why? The liquidity is down here. Okay, the liquidity is down here. So same thing. Okay, don't worry. We're not going to change the setup. Okay, we're going to use the trading range to look for the sell. How can we do that? Look at, now you can even use this as a breakout structure, or else look at all this liquidity that got cleared, equal highs. Okay, liquidity taken out, structure broken, then this turns into a strong high too. Can you see that? Okay, even on a higher time frame, it is a strong high. Let's go to the H1. Look at this. Liquidity taken out, structure broken. Okay, so now this, this turns into a strong high. So now look at what we're gonna do. Price starts to pull down. Okay, like that. Now we buy it here. Now, are you gonna target this high? No, right? Because why? It is a strong high.
It's a strong high. Yes.
Yeah, it is a strong high. So if there is a strong high, a trading range will get created, right? A trading range will get created. So how do we know the high has created the low of the range? We have to get a bullish breakout structure, right? A bullish breakout structure. So after you get that bullish break, what is the reason for the retracement? They're going up to take out the internal range liquidity.
Oh, yes.
The swing highs that are inside of this trading range now, from here to here. Okay, so above the internal range liquidity, what did we have on the 4 hour once again? Look at this. This is where the internal range liquidity is, and right above that, the base of the wick.
Ah, yes.
See that? 2 rejection blocks, very easily. Okay, and then what we do is, for the buy, the safest target will be here. See that? This will be your target, and then we can start looking for sells from here. Stop loss can go above the strong high. See, only 3 pips. Can you see that? Only 3 pips from the higher time frame. Okay, and now for the sell, you can have long-term targets since we have all this liquidity down here. Can you see that? Okay, so a hedge setup. Okay, we're hedging this. Okay, so let's see. Then it starts to go up. You got this bullish breakout structure, and then patiently wait, and there you go.
Oh, nice one.
See that? So you take your partials from, you take out everything from the buy, actually, not partials, because the liquidity is down. Okay, so you take out everything. Now I'm not encouraging you to take both the trades. No. Okay, I'm not encouraging you to do that.
only
if you miss the buy, you can take the sell. Okay, or else, if you took the buy, like, you don't even have to look at the market charts again. Okay, don't do that. Okay, like, we chose trading to, like, have some freedom, right? So if you're just looking at the charts every single time to get an entry, now where is that freedom? Okay, so don't do that. Don't do that. If you get
Because
this, you're done.
the
Okay.
buy could have not been so high. The
Yeah.
buy could have retraced
Okay.
before.
Exactly.
Yeah,
Okay.
yeah.
So then this is the safest place for the target. Yeah, this is the safest place for partials. And then what happens? Here comes the drop. And done.
Oh,
Okay, so you take your partials.
partials,
You
yes.
take your partials and then you leave the runner into all this liquidity down here.
Yeah,
Okay.
nice.
See that?
Okay.
Look at that.
Okay. Ah,
Right
yes, nice,
into that.
nice
Okay,
one.
so can you understand that about trading ranges? Okay, so I'll show you more. Don't worry.
Yes,
Let's
it's
do
good.
a whole top-down analysis, okay, from the higher time frame to the lower time frames.
Okay.
So yeah. But as in here, of course, like I told you, I had no idea what happened. Okay, this just started melting. That's okay. Okay, let's talk about this example. This is actually a very nice example. Let's go to 1 hour. Can you see we have a strong low in here? Why? Liquidity taken out.
Yes.
Okay, liquidity was taken out. Structure was broken. Then this turns into a strong low, right?
Yes,
Strong low. Okay, liquidity taken out and structure was broken. This turns into a strong low. Now, how do we know the low has created the high of the range? A swing low that created a higher high has to break.
Yes.
Right? This is how we know trading range is created. So now, then obviously this low has to break, right? In order for the trading range to get created. This is the swing low that created a higher high. Then once this gets broken, what is this?
Internal range.
Exactly. That is internal range liquidity. Then I told you lower time frame trading range, high time frame point of interest, right?
Yes.
High time frame point of interest. Okay, so now look at this. Just remember, this is where the Asian low is. Okay, this is where the Asian low is. Right below the Asian lows, what did we have? Daily. What is this? Imbalance.
Yes.
Can you see that? Okay, we had a daily imbalance. Okay, and then this is where the Asian high is. See that? Let me put some other color. This is where the Asian high is. And right above the Asian highs, what did we have? Weekly. Give me a second. See that now? This is where the Asian high is. Right above the Asian highs, what did we have? The weekly imbalance.
Yes. Okay.
Did you see that? Okay.
Yes.
We had a weekly imbalance. Okay. So a buy from the daily imbalance, a sell from the weekly imbalance. Okay. A sell from the weekly imbalance. So now let's see what happened. Okay. Let's see what happened. Okay. Now let me quickly play price forward. Because higher time frames are actually they are awesome. Okay.
So
okay,
most of the time, the price will feel the imbalance, right?
Yeah, the high time frame imbalances. Okay,
Yeah.
not the random lower time frame, the 5 minute, 1 minute stuff. No, we don't care about that.
Yes,
okay, we don't care about that.
Because
and then
even in 15 minutes, I sometimes see imbalance that is
but
not
they never
feel.
feel it, right?
Yeah,
yeah, they never feel it. They don't have to, because if they do something on the high time frames, that is more than enough. That's the thing.
Okay.
Okay, and also this day there was news. Okay, this day there was high impact news. Okay, so when there is news, we can't expect London we can't expect for London to do the major move. No, London will also build up liquidity for the news. Okay, that is what London would do. Okay, so yeah, let's see what happens. Okay, yeah, look at all of this. Look at all this liquidity. They're building up. Look at the trend line. Look how clear the trend line is. Yeah, look at this. Coming back into that once again. More and more buyers are getting in. Okay, and then news comes right now and back from that level.
Yes.
Okay, here we go. I did not take the sell. I was more focused on the buy to go with the trend. Now, once you get this breakout structure, what's your trading range from here to here? Then internal range liquidity, high time frame point of interest. Now I'm buying it. Stop loss, okay, was below somewhere around here. 4.2 pips, and I'm targeting the external range liquidity.
Could you show me again what is the high time frame POI?
No, I showed you this one right here. See this? The daily imbalance.
Yes, right. Yes.
The daily imbalance. Okay?
Yes.
We're buying it from the daily imbalance.
Yes, nice.
Okay, that's why I told you the high time frames are very important. Okay, and then yeah, let's see what happened. Let it go. Look at the drop.
Yeah,
there we go. Yeah,
yes,
big drop. Tapped right into the point of interest. Okay, tapped right into the point of interest, and then that starts to go.
So
Okay.
yes.
Yeah.
So
Yeah, because
you don't fear the 15-minute imbalance to be filled here.
no, we don't care. Because why?
Yes.
The internal range liquidity is here,
Mm.
and your high time frame point of interest is here. Okay, so after
Yes.
doing
It's
this,
stronger.
there's no point of coming here. That's the thing. It's stronger. Okay, what would you
Yes,
trust?
yes.
A 15-minute imbalance or the daily imbalance once again?
Mm.
Okay, obviously the daily, right? Okay, obviously the daily. Okay, so yeah, but slowly
Yes,
but
yes.
surely they did run into the target. See that?
I think this is what fucked me a lot of time.
That's the thing. Okay,
Yeah.
don't be more focused on the lower time frames. That can
Yes,
get you, yeah, that can get you like confused. Okay, don't
yes,
do that.
yes.
Okay, don't do that. So can you understand the setup? Okay, same thing,
Yes,
that
nice,
I say. Yeah, same thing that I told you. Okay, it's like
nice.
even in here, this buy right here. Let me show you. Where did it come from? Okay, now see, if you are only with the lower time frames, now you see, if you are only with the 50-minute, you'll say stop hunt, breakout structure, strong low, break to the downside, high of the trading range, Asian low. Now you're trying to buy it from this imbalance, trying to do this, right?
Yes.
This is what you would try to do, but focus on the higher time frames. Go to the H1. Okay, now look at the H1. Okay, look at the H1. If you look into the H1, now ask yourself, first of all, we had this strong low right here. Look at this. Liquidity cleared and structure was broken. Can you see that?
Yes.
Okay, so this right here was a strong low. How do we know the low has created the high of the range? Okay, a swing low that created a higher high has to break, right? So now, can we mark this out as the high of the range? No.
No.
Because why? Do we have this formation? No.
No.
Then how can we mark this out as the high of the range? That is not the high of the range. So then ask yourself, who is the swing low that created a higher high? This one.
Yes.
See that?
It
So now,
has to be
obviously, they have to
taken.
take that out. Yeah, they have to take that
Yes.
out. And right below that, we had the rejection block. See that?
Yes, nice.
The base of the wick unmitigated. So when this gets taken out from here to here is the trading range. And this is like that example that I taught you at the beginning. Now look at this. Higher highs, people will think this is the higher low.
Yes.
Higher high, expecting a higher low and a higher high.
Yeah.
Everyone will be buying it here, stop loss here. But what will we do? We buy it from where they place their stop loss at. Okay. And then you can do a little refinement like this. Can you see? We had an imbalance in here on the M15. Okay. You had an imbalance, or else you can mark it out from the rejection block right here of the 15 minutes. See? Not over refinements, only 1.3 pips. Okay, just a 1.3 pip refinement. That is okay. And then, yeah, let's say we bought it. Now we have a double confirmation. What's that? Okay, now one thing is we know that this is the inducement, that structure inducement, right? Now everyone will think this is the higher low. Okay, everyone will think this is the higher low. They will buy it with their stop loss here. That is one thing. And also this right here was a strong low. Okay, the main thing is we have Asia. If it runs below Asia, we'll be expecting a bullish day. See that? Okay, if it runs below Asia, we'll be expecting a bullish day. So let's expect price to get here by London session at 12:30, or else by the London Q zone, by the Frankfurt session at 11:30. Stop loss below the 50-minute rejection block. See that? You can even have it here. That is 5.7 pips. Okay, but for me, that is too much. Okay, that is too much. So let me show you. I think we had something on the 1 minute. I don't remember. Because yeah, I'm so used to
most of the time you take a little stop loss, so price don't go so far in the
sometimes I'll get stopped out. Okay, sometimes I'll even get stopped out. Okay, can't help it. Okay, so like I'm so used to that tight stop loss. That's the thing.
But
so used to that tight stop loss.
Most of the time it's good for you.
Yeah, most of the time it's good. Okay, because the thing is like anyway, we only have 1 or 2 points of interest look at, but most other smart money traders, they will start to look at every single imbalance and point of interest out there. Okay, that's the thing. They start to look at everything, but for us, we have only 1 or maximum 2. That's all we have. Okay, so that way we can, like, even if you set a buy here, if you get stopped out, you can buy it from bottom one, because we know that anyway from here price is going to reverse, something like that. Okay, but it is risky. Okay, always, like, if you are not confident with these risk entries, you can always go for a confirmation entry. Okay, but the thing about confirmation entries is sometimes you will not get that re-entry. Okay, sometimes, but the thing is, missing a trade is better than losing a trade, right? Okay, so try to always go for the confirmation entry. But I'm so used to the risk entry like this. Okay, like this. Okay, because yeah, the London Open setup is awesome. Okay, so now we're gonna buy it, targeting here. Now everyone else will be buying it like this.
Yes.
Right?
Yes.
Everyone else will be buying it like this, but we will not be doing that. Okay, so let's see what happens. Okay, look at that. Stop loss taken. And there we go. We are tapped in. Okay, and there we go.
Oh, nice.
Cool. Done.
Yes.
Look how quick the move is.
Oh,
okay,
yes.
look how quick the move is. Timing was perfect. See, right at 11:30 p.m. London Frankfurt session. Okay, London.
Yes. Okay.
Yeah.
Okay.
Right at Frankfurt session, we had that. Okay, so
Nice.
can you understand that example? Yeah, I hope it's clear.
Yes. Yes,
okay?
it's nice.
Yeah. Let me show you more. Let me show you more. Okay, I'll show you some more examples. That way you're familiar with the trading ranges, and then let's go to a top-down analysis and everything. Okay.
Yes. Okay.
Yeah.
In
here.
Oh,
yeah.
Or maybe could you? I don't know if it's the same on gold.
Gold? Yeah, I'll show you. Even today's setup. Even today's setup. Okay, look at this. Okay, let me delete all of this and then show you.
Because sometimes
same setup. Okay, same setup. Don't worry. Okay, look at this. Stop hunt. Okay.
Yes.
And a breakout structure. Okay, why am I marking it out from here? Because this is where they actually broke structure. See, a body closing. Okay, a body closing. I wouldn't count this as a breakout structure.
The wick is not a
a wick isn't a breakout structure. No.
Yes.
Okay, a wick isn't a breakout structure. It's only a stop hunt. Okay. So then a stop hunt and a breakout structure will make this a strong high. Right? We'll make this a strong high. How do we know the high has created the low of the range? A swing low. I'm sorry, a swing high that created a lower low has to break.
Yes.
Right?
Yes.
So here we have that break.
Yes.
Then you know that. Okay. Now here from here to here is the trading range. Why are they going up? They're going up to take out the internal range. So here we have the internal range. See that? Okay. Above the internal range, we look for a high time frame point of interest. What do we have? The 4-hour rejection block.
Yes.
See that? And then what we do is we can sell it from here.
Okay.
Target the external range liquidity. Stop loss can go above the candle that has the imbalance. Can you see that?
Yes.
Right here. Yeah, the candle that has the imbalance, this bearish candle. Okay.
Yes.
Only 11 pips. Okay, 11 pips on gold is more than enough. Okay. Like you can't have 5 pips stop losses on gold. Okay, that is crazy. Okay. And then price starts to go up. I told you. Oh, I think wasn't that clear on this. Yeah, it's not that clear on this. Okay, let's see. Look at this.
Nice.
Tap. Okay, now where is your final target? Your final target is anyway down here. Okay, this is your final target. But on gold, what I usually do is I pay myself at 100 pips. Okay, I always pay myself at 100. 100 pips is not bad, right? In one day. Okay, 100 pips in one day. Okay, so what I would do is I'll pay myself at 100 pips and then I'll leave a runner into the external range liquidity.
Okay.
Like this. Okay, then what happened? Yeah, look at this.
Okay.
Dropped. Okay, now they are reacting from this order block. Okay, so that's okay. That's okay. They will anyway come down here. But you saw the setup, right? Same thing. From internal range, now we're targeting the external range. See that? Now we are targeting the external range. So this right here will be another good zone to look for sells from the breaker. Can you see that?
Oh, yes.
See the breaker right here. So we can even look for sells from here. Let's see. Okay, let's see. But yeah, can you understand that example? Same thing. Okay,
yes.
Same thing on this.
And does the Asian range do the same thing?
Yeah,
with
even
gold?
Asia. Even Asia. Okay, so let me show you. We had Asia in here. Okay, Asia starts at 2:30 and then this is my time. Okay, this is my time.
Yes.
Like this. Okay. See, even today, what did they do? Look at this. This right here will be Asia. And look at this. Look at the timing. Okay. 1 hour after London Open, took out the Asian lows and look at the pullback they gave you. 60 pips.
Yes.
Okay, 60 pips. So that is more than enough, right? 60 pips in one day. Okay, that is more than enough if you had the buy. But yeah, if you understood the trading ranges, then you will not be looking for little trades from here. You will focus on this right away. See that?
Okay.
Yeah, you will focus on this right away. But can you understand this? But even the sell. Okay, let me show you. I actually got the sell in here. Okay, so I'll show you where it came from. Asian high. Yeah.
Yeah. In this one, if we look at Asian range. Can we say it's a strong high?
Yeah. That is what I'm about to show you. Okay, look at this.
Yes, okay.
Yeah, liquidity taken out. See that? liquidity
Yes.
taken out, structure broken.
Yes.
Okay, same stuff. Okay, same stuff. Strong high. How do we know the high has created the low? You have to get a bullish breakout structure. So I
Yes.
think, yeah, here we have that.
Here it is.
Then from here to here is the trading range. Why are they going up? They're going up to take out the internal range liquidity.
Yes.
And right above that, what did we have? High time frame POI, H1 rejection block.
Yes.
H1 rejection block. Then what we do is we sell it. Okay, we sell it in here like this. We target the external range liquidity. Stop loss can go above the strong high. See, only 6 pips. Only 6 pips. Okay, on gold. Okay, and your target is 60 pips. Okay, a nice 1 to 11. So then what happens? I don't risk 1%, but yeah, if you do, there we go. Tapped and done.
Nice.
That's all you need for the whole damn day, right? Okay, so I told you, London opens at 12:30 p.m. my time. Look at when the setup got tapped in.
This is London. Oh yes. Every
50
time.
minutes before London. Okay,
Oh,
15 minutes
okay.
before London.
Before
That is why
London.
we focus on that time. Okay, I focus at that time because very quick setups, very quick setups.
So
okay?
it was during Frankfurt, no?
This was during, yeah, this was Frankfurt. Okay, this was Frankfurt, but yeah, the time that you should stay active in the charts is from London kill zone to London session, because that is when the setup usually gets formed.
Okay.
Okay, these are the times when you should stay active in the charts. Okay,
so it's
in your
Frankfurt.
time, yeah, so you're from Paris, right? So let's set it to Paris time.
But
London, Amsterdam. Yeah,
I've put my my chart on New York time.
New York time. Okay, so in New York time it's 2 a.m. Okay, from 2 a.m. to 3 a.m. That is when you should stay active in the charts. Okay, if you want to get this set up. Okay, yeah, 2 a.m. to 3 a.m. Make sure you stay active in the charts during that time of the day. Okay, or else, oh yeah, we had Paris in here. In your time, from 8 a.m. to 9 a.m. That is when you should stay active in the charts. Okay, yeah. So if you get that, you can chill the whole day. Okay, one good setup and that's it. Okay, just think of it. Yeah, once you get consistent with a setup like this, okay, the only thing you have to do is increase the lot size. Increase the lot size. Okay, once you're confident. So just one setup like this and you're done for the whole damn day. You're out.
You can do the challenge with just with one trade.
Yeah, just one. This is all you need. Okay, now imagine using something like a 3 standard lot size here. Okay, 3 standard. If you lose the trade, okay, if you lose the trade, you will only lose $150. But if it runs into your profits, how much is that? Yeah, $1,800. $1,800. Okay, so easily you can do that. And then once you get that sell from here and target this low, you pass the challenge. That's it. Okay, so very easy, but patiently wait. Okay, patiently wait. Do not miss a thing. Okay, so first see if you have marked out the strong high, then see if the range has been created, then see if you properly marked out the internal range liquidity, and only then you pull the trigger. Okay, do not rush the process. So slowly, slowly check one by one. Okay, so can you understand setup? A very easy setup. Okay, a very easy setup in here. Okay, yeah.
So
okay, yeah.
So a strong high or a strong low will always hold for at least one time.
Yeah, at least one time they will hold. Okay, they will hold. You can use that.
Okay.
Exactly. Okay, you can use it at least once. Okay, so you saw that, right? Even on gold is the same thing. Okay, even on gold is the same thing. Now, all this while we were working with the lower time frame, right? Not the lower time frames, actually, with the 4 hour, 1 hour, and the daily and stuff. But yeah, with the 50 minute. Now I'll show you that same setup on daily. Okay, the same exact setup on daily.
Yes. Okay.
Okay, look at this. Stop hunt, breakout structure.
Yes.
Okay. Then this turns into a strong high. Right? This turns into a strong high.
Yes.
How do we know the high has created the low of the trading range? You have to get a bullish break. Right? So here we have the bullish breakout structure in here.
Oh, it's here. Okay. Yes.
Okay. Yeah. See that? A swing high that created a lower low has been broken.
Yes.
Okay.
This is confusing me sometimes because depending on the time frames.
A multi-time frame analysis. Okay, that is what we call a multi-time frame analysis. Okay, make sure you always switch through all the time frames. Okay, because you can't just stay on one time frame and try to trade. No. Okay, now some people will tell you if you're an intraday trader, like one time frame will be enough. 1 hour and the 50 minute will be enough. No, that is not. Okay, you can't do that. Okay, in my opinion, you can't do that. You will take a lot of losses before winning. Okay, you will barely have a winning trade. Don't do that. Okay, so from here to here is the trading range. Then what is the reason they're moving up? That is to take out the internal range liquidity.
Yes.
The swing highs that are within this trading range. So see, picture perfect. They took that out.
Yes.
And above that, we will be looking for a higher time frame point of interest. What did we have on the weekly? An order block. Can you see that? That doji.
Yes.
Can you see that doji? Yeah. The last push up before the push down.
Yes.
See that right here? Okay, that will turn into your point of interest. Now what you do is now, let's see. Now, are you going to sell it in here with your stop loss above that high and target this? No. 87 pips.
Too much.
You don't want that, right? Too much. Okay, then what we do is we wait until price gets inside of that. Okay, let's wait for a confirmation.
Yeah, yes.
Okay, let's wait until it gets inside of that. And there we go. See that?
Does this
went inside of that? Yeah. I'm sorry.
Ah, yes. Okay. It just to trade a little touch.
Yeah, a little touch.
It's
and
enough.
then what did we get? It's enough. See this?
Okay. Yes.
Stop hunt of a swing high, break of a swing low. Can you see that?
Yes.
Okay. A strong high on the H1 is created after tapping into the weekly point of interest. Okay. After tapping into the weekly point of interest. Now let's drop to a lower time frame to get the entry. Okay. Now remember, this is not only a strong high on the 5-minute, but it's a strong high on the 1 hour too, right? A strong high on the 1 hour too. Yes. Okay. So we have a strong high. How do we know the high has created the low of the range? We have to get a bullish break, right? So here we have the bullish break.
Yes.
Now you know the setup. Now you already know where to get the entry from, right?
Yeah,
from here to here is the trading range. What is the reason for the retracement? To take out the internal range liquidity. Okay. And what do you have above the internal range liquidity and imbalance?
Hey, I have a question.
Yeah.
Sometimes in the range we have multiple internal range liquidity.
Yes.
So how do you know which one will be taken? You know.
Which one will be taken off? Now, in this example, of course, this is this will very clearly get taken off because why? Now, what have the smart money traders been taught? Choose the order block that broke major structure. Okay, as they'll tell you, this is a drop, base, and the rally. They wait until it returns back to the base. Okay, but for us, this is internal range liquidity, right? This is internal range liquidity, and also, like I told you, right? A bounce in a bearish market is a hunt for buy stops. So where are the buy stops? It is above that high. Okay, it is above that high. And now for the question you asked, now we can't say 100% they're going to take this out, they're going to take this out. No. Okay, that is why inside of the lower time frame trading range, we look for a higher time frame point of interest. Okay, so when there is multiple, now in this example, on the daily example that I showed you in here, okay, now I can't tell you right away they're going to take this out, and this out. No. Okay, so the best thing to do is wait until they take this out. Okay, wait until they come inside of this imbalance. See that imbalance in here? Okay, wait for them to fill the imbalance. Look for the reaction. If they give you a bearish breakout structure on a lower time frame, you're going to look for sells. But if they do not give you that, you still keep buying. Then you wait for this to get taken out. You look at the reaction from this order block. If they give you a bearish breakout structure, you start to sell. But if they do not, you wait for this to get taken out. This is the only point with the internal range liquidity, the high time frame point of interest. Now you drop into a lower time frame once again. See that? Can you understand that? Okay, that's the best thing to do because now no one can tell you 100% they're going to take out this swing high and then fall. They're going to take out this swing high and then fall. No. Okay, the best thing to do is wait and watch. Okay, wait and watch this. Just see what they're showing. Okay, just trade what they're showing you. Okay, not what we think, not what we think they're showing us. Okay, that's it. And then what happened now? Okay, we have this strong high on the H1, internal range liquidity on the 5-minute, and everything is coming from the weekly point of interest. So which means our targets will be longer. Okay, our targets will be longer. So let's see. There we go. Tapped, and then comes the drop. So, okay. Now what you do is you take your partials. Okay, you take your partials and where are you going to hold it into? Okay, if you remember, where is the setup based on? Daily. After taking out the daily internal range liquidity, where will they come next? Daily external range liquidity. See that? Now where is your target? Your target is all the way down here. Daily external range liquidity.
Yes, nice.
Can you see that? Okay, same setup, same setup, but the time frame is a little bit bigger. Okay, same setup like this. Okay, because if the range is a high time frame range, then your targets will also be a high time frame like that. See that?
Ah, yes, nice.
A 2.6 pip stop loss for a 580 pip target. Okay, that's it. Okay, very easy. But like, oh, if you understand the trading ranges, actually, like, you don't even have to stress about trading anymore. Okay, if
Yes,
you mark it out properly, because you will
amazing.
always have the POIs properly. Okay, like, yeah, sometimes you will get stopped out. I get stopped out too. Okay, I'll show you the
Mm,
losses I take and everything, because I'm not telling you I'm having a 101% win rate. No. Okay, even I get stopped out. Okay, because
of
losses are
course.
just a part of the game. Okay, so we can't help it. Okay, as long as you have trust in the system, then yeah, that's it. That's it. You can make winning. Okay, so can you understand this example? I hope it's clear. Okay.
Yes,
Yeah.
it's good.
Yeah. Now I'll show you. Yeah.
I
Give me a
have one
second. Yeah.
question.
Yeah.
Do you use a week off schematics?
Wyckoff? No, no
No,
Wyckoff. I
no.
hate that. Like, I know Wyckoff. Okay,
Yeah.
honestly, I studied Wyckoff. I know Wyckoff, but I never used that. Okay,
Okay.
I never used that. Okay, because
Okay.
Wyckoff is crazy. Okay, so yeah. Now, yeah. Now I'll show you how I do a top-down analysis. Okay, so for my top-down analysis, I'll always start from the weekly. Okay, I'll always start from the weekly. Now, when I say the weekly, now I'm not going to do this. Okay, now when I say the weekly, now people think I do this. Okay, stop hunt, breakout structure, strong high, low of the range, break to the upside, discount premium price, and another break in here. No, like, why should I even pay attention to this, right? I'm an intraday trader. Who cares about what happened here? Who cares
Oh
even if
yes,
the
it's
market
too
crashed
long.
in these areas? Yeah, no one
Yeah.
cares. Okay, so the
Okay.
only thing that I focus on is the current price action, these
Yes.
areas, the recent price action. This is all I want to see, because I'm an
Yes.
intraday
Of
trader.
course.
Okay, all I need is a bias for one single weekly candle. Okay, all I need is a bias for one single weekly candle. That is more than
Yes.
enough for me. Okay, so
Yes.
let me show you some clear examples. Let's say we were yeah, if we go here, we can't go into lower time frames. Yeah, let's say we were here. Okay, yeah,
Mhm.
this will be a nice example. So on the weekly, what I want to see is just one or two things. Okay, not a lot of details. On the weekly, I just only want to see a little bit of details. Okay,
Mhm.
what is the most recent major breakout structure that we have on the weekly? That is what I want to see. What is the most recent major breakout structure? We had this, we have
Yeah.
this broken. Can you see that? Okay, this was broken right here. Okay, so
Yes.
still bearish. And then we have another break in here. This is like, I wouldn't qualify this as a very high quality break, because see, only a wick below that. But yeah, even if you go to a daily, this is a very, yeah, this is a breakout structure. Okay, but the point that
Yes.
I'm trying to prove is that, do we have any reason to look for long-term buys in here? No, right? The market is heavily bearish, so why would we
Mm.
look for long-term buys? Okay, instead what we could do is we could look for long-term sells, right?
Mhm.
Long-term sells. Okay, so we can expect another bearish week. Okay, we can expect another bearish week, because think of it, just when price just keeps on breaking like this, why would we just expect a random bullish week?
Mhm.
We can't
Yeah.
do that, right? There's no point of doing that. Okay, and also, what did I tell you about candles? Now, if I talk about a daily candle, this is what I told you, right? Asia falls run in the opposite direction
Mm.
and it drops. This is
Yes.
what happens, right? It drops, and with London close, they will come back into a consolidation. Okay, this is what happens in a day. Okay, and then again, the next day, Asia starts, falls run in the opposite direction, and it falls.
Mm.
This is how the candles go, right? This is how the candles go. So something like this. So let's say opens for shit, that's ugly. Let me draw it out clearly. Opens, falls run in the opposite direction, drops,
Mhm.
and then it comes back into a consolidation.
Mm.
Right? So what is this? This is the bar chart, right? This is the bar chart.
Yes.
In
Yes.
here now,
Yes.
if it's a bar chart, you can see this is how the bars are created. Look at this is how the bars are created. Now, price
Yeah.
is fractal, right? Price is fractal. So that is the same formation for every single candlestick. For every
Mm.
single candlestick, see, like if we talk about this bearish candle, what happened? Open right here,
Yeah.
buyers started pushing it up, okay, and then induced buyers into induced buyers into the market. See, buy stops are
Yes.
activated.
Mm.
Okay, buy stops are activated. Everyone expects a bullish week, but then what happens? Where? Sold
Yeah.
back down.
Go
Okay,
down.
so it just happens. See, opened, false run in the opposite direction. It fell for around, what's that, 50 pips. Okay, so everyone expected a bearish week, but what happened?
Mm.
Bullish,
Ah. Yeah.
bullish. Okay, yeah, it just keeps on happening.
So
Okay, you
so
can see that, right? Yeah.
the Monday always fake.
Now, not Monday. Okay,
Not
normally
Monday.
ICT tells you Tuesday has the most chances of making the high of the week if it's a bearish week.
Ah,
Okay, he
Tuesday.
tells you, yeah, Tuesday has the most chance of making the high of the week. Even Monday could make the high of the week. Like, we don't have to focus on that actually. Okay,
Yeah. Yeah.
yeah, there's no point of doing that. Okay,
Okay.
who
Okay.
cares
Just
about
asking.
who's making the, yeah, like, ICT teaches you that. Okay, ICT teaches you that, but like in my opinion, I don't care about that. Okay, because
Okay.
you don't want to, right? Just get your money and stay out of the market. We don't have, because the market is not us, right? Who cares if the high is getting formed on a Saturday? No one cares. Okay, something like that.
Yeah, yes.
Okay, like try to keep it simple as possible. Okay, try to keep it simple as possible. That's the
Okay,
best thing.
okay.
Okay. Now in here, where will the next weekly candle open? Now, once again, remember, you do not have to look at the weekly time frame every single day, because it takes 5 days to make one of these candles. So there's no point of looking at it
Yeah.
every single day. Okay, so yeah. Now, where will the next weekly candle open? From here, right? This is where the next weekly candle would open. It opened here, closed
Yeah,
here.
yes.
The next weekly candle will open in here. So once it opens here, what can you expect? A false run in the opposite direction, right? You can expect a
Yes.
false run. So which means the false run can go up and then a drop, right?
Yes. Yes,
So
yes.
where can that go into? The weekly rejection block.
Yes,
Can
nice.
you see that? This is
Yes.
all we want to see on the weekly. Okay, this
Mm.
is all we want to see on the weekly. Do not even overthink. Okay, don't think, oh, this is not a strong high. Oh, who cares? Okay, we are still on the weekly. Okay, we don't care about that. Now go into the daily. Okay, now go into the daily. Now on the daily is where the fun begins. Okay, now on the daily is where we start marking out the trading ranges. Okay, that is where we start marking out the trading range. That is where I start marking out the trading ranges. Okay, so let's see. First of all, we had this stop hunt. See that? Stop hunt, break of minor structure, and a break of major structure. Then this turns into a strong high, right? Into a strong high. How do we know the high has created the low of the range? I told you first it has to break below this. That is done.
Excuse me. What
Yeah.
is you say minor structure and major? What
Yeah,
does this mean?
this was minor structure. See that? This is the major structure. See, low, high, break.
Yes, this is the
Can you see
daily.
that?
The major
Okay.
is the daily, right?
Yeah, this is the daily time frame. Okay,
Yes.
this is the daily time frame. So this was only a break of minor structure because your major structural point was here. Can you see that? Okay, that's why I told you this was only a minor structure break. Okay, so only after price breaks below this low, we can confirm that this is the high of the next trading range. Okay, this is the high of the next trading
For the
range. Can you
daily.
understand that? Yeah. Okay.
Yes.
And then, how do we know the high has created the low of the range? We have to get a bullish break, right?
Yes, yes.
Then here we have that bullish break.
Okay.
Okay. Then from here to here is your trading range. Now, can you see this? This high right here is acting as that break of structure point to confirm the trading range and as also as the internal range liquidity of this trading range. Two purposes. Can you see that? Okay, it is the break of structure point like this.
Yes.
And it is also the internal range liquidity of this trading range.
Yes.
Okay. So what happened? Okay, they took out that internal range liquidity. Actually, they tapped into the weekly rejection block. You can see this on Oanda, but if you go to FXCM, you can see very clearly they tapped into this wick. Okay, and then yeah, let's say they tap. Yeah, because you know that, right? From broker to broker, the information differs. Okay? So yeah, they tapped into the daily order block, took out the internal range liquidity, and then here comes the drop into the external range liquidity.
So they don't go higher because the liquidity is
there is no liquidity. See, this was not even a swing high. Can you see that?
Yes.
Okay, so they took that out, tapped, and then they started dropping.
But they could have taken also the higher liquidity if they wanted to.
Yeah, if they wanted to, they would have even gone. But since this is a strong high, we can expect that to hold. See that? Since it's a strong high, we can expect that to hold. Okay. Now, once you get this stop hunt, and once it breaks below this low, then this turns into the next high.
Yes.
Right? This turns into the next high. How do we know the high has created the low of the range? You have to get a bullish break, right? Now, do we have the bullish break? No.
No, not yet.
We do not have the bullish break. So now, can you mark this out as the low of the trading range? No, that's wrong.
Not yet.
That is wrong. Okay, now what are we going to do? Now people will start panicking. Okay, now we do not have the low. What are we going to do? Now we're going to wait until this breaks. So they will wait for days and days until this breaks. No, you don't have to do that. That is why you have all these time frames. Drop one time frame lower. Okay, drop one time frame lower. Okay, so yeah, let me make this line straight. Yeah, I want them to be straight. I want them to be neat. Yeah. Okay, so now we can drop like one time frame lower. Okay, just one time frame lower. And now what we're going to do is we'll be marking out a 4-hour trading range. Okay, because since the daily range isn't created, we're going to mark out a 4-hour range. Now look at this. The 4-hour range is very clear. See this? Stop hunt of a swing high and break off major structure. Can you see that
Okay.
on the 4 hour? Okay.
Yes.
Now on the 4 hour, we have a strong high. Mark
So
that out.
this is the 4-hour range.
Yep. Okay. This is the 4 hour range. This is the
Okay.
high of the range.
Yeah.
How do we know the high has created the low of the range? You have to get a bullish break, right?
Yes.
A
Yes.
bullish breakout structure. So here we have that break.
So it
Can you see
has
that?
to break
Yeah.
a swing high. Yes.
Yeah, a swing high. See that?
Created
A
the low.
swing high
Yes. Yes.
that
Okay.
created a lower low has to break. You can even use this break, or else look at this break. A swing high that
Yes.
created a lower low has been broken. You can even use that break. See, but
Okay.
if it is confusing you, you can use this break. No problem. Okay, same
Yes.
thing. Now, your trading range will be from up here to down here. Right? This will be your trading range. Now, there is no point of view fearing this move. Now, some people will think, okay, now sells from somewhere out here will be risky because why? You have an imbalance in here.
Yeah.
Who cares? No one cares. Okay, because why? This is a strong high, right? So before filling that imbalance, they have to go through this first, right? They have to go through this first. Sorry for that. Yeah. Now let's mark out the range from here to here.
So there is more chance the strong high will hold than the imbalance.
Yeah. Now the thing is, now see, now inside of this lower time frame trading range, we automatically marked out the higher time frame point of interest. What's that? The weekly rejection block and a daily order block. Can you see that? The last push up before the push down. Okay, now we have marked that out. Okay, now you have no reason to fear this imbalance because why? Like how many pips is that from this point of interest? 130 pips. Do you think they're going to go for 130 pips right away and then drop? No. Okay, and the other thing is this is a strong high, which means this is the high of the trading range. Okay, there's no point of us waiting for this high to get taken out now. Okay, see that? Okay, this is also a higher time frame. Okay, and now what we could do is refine this daily and the weekly zone into the refinement is actually not necessary, but if you want to, you can leave this zone into the 4-hour rejection block. Can you see that? See that?
Yes,
right.
yes, I do.
You can refine it to the 4-hour rejection block. But why did I tell you the refinement isn't necessary? Because just imagine you refine it to some maybe a 5-minute point of interest like this, and let's say you sold it, and then you targeted this low. Why is this risky? Because if this is the trading range from here to here, this could also be internal range liquidity, right?
Yes.
Okay, so we don't know. Okay, so the best thing to do is wait until price gets inside of this zone, and only if it gives you that confirmation, we will be selling it. Okay, if it does not give you the confirmation, we're not going to do that. That's it. Simple. Okay, simple. If it gives us the confirmation, we will be taking the trade. Okay, now we have everything marked out. Trading range marked out. Okay, the high time frame point of interest marked out. Now, are you going to wait until it gets here? No, you're not a swing trader, right? You're an intraday trader. So let's go with the lower time frames. Okay, so let's try to get some intraday trades. You can buy, or else you can just go with some intraday trades. Okay, knowing that whatever you take in this scenario, in this situation, is not going to be a long-term trade, because why? We are at a retracement of the high time frame trading range. So can you expect a retracement to like be quick or long-term? No. Okay, retracement will not be long-term. Yeah, it is only counter trend. Okay, so remember, we're going with the counter trend now, so we are not going to hold trades longer. Okay, and then let's see what we had on the H1. We have a strong low in here, stop hunt, breakout structure, retrace to entire. Let's go to the 30-minute.
And so I have another question. Don't you fear the higher time frame, so the daily, to get broke, so the range is created?
Yeah, that's a good question. Now you're asking me, since the low from down here is broken, you're asking me if this high is gonna break. Okay, we don't know. Okay, we don't know, because once again, we don't know. That is why we mark out a zone and wait for a reaction. Okay, simple. Okay, you don't have to overthink. That is why we mark out a zone and we wait for a reaction. If it does not give us the reaction, it'll just keep on buying. Then this will break and a range will get created. Okay, but if it gets here and gives you that bearish breakout structure, we'll be selling it until the low of the range. Can you understand?
Yes.
Okay, simple. Okay, that is what we're going to do. Okay. So yeah, let's see what we had on the M30. Okay, let's see what we had on the M30. Now, can you see this strong low in here? Look at all these equal lows that got cleared out. Yes. Yeah, a very clear strong low, liquidity taken out. a major breakout structure in here, or is this breakout structure anything? But this is a strong low, right? Now remember, now this is the mistake that most people do. Okay, this is the mistake that most people do. Once they have a strong low or as a stop hunt, they will drop into the lowest time frame possible and pick out some 1 minute random POI from here, telling
Yes.
that this is the last push down before the push up. Okay,
Yeah.
now sometimes the market might not even get here, and sometimes even if it gets here, it will go straight through it. Okay, then
Yes.
they'll tell you order blocks aren't working anymore. No, okay. If you want to see where the sell really started from, okay, you're not going to do it on a lower time frame. You're going to do it from a higher time frame. Okay, so where do you think the sell started from to take out this liquidity? Okay, go to a higher time frame.
Yes.
What did we have on the 4-hour? Who took out this liquidity?
A week.
Who took out this liquidity? The rejection block.
Yes.
They have not tapped into the wick yet. Can you see that now? Can you see why are we so focused on these wicks? Okay, why are we so focused on these wicks? Because market structure is actually printed on the line chart. Okay, market structure is actually printed on line chart. The manipulations are done by the wicks. Okay, so wherever there is a manipulation done, the price needs to mitigate that area, right? Okay, so that is why we are focusing on the wicks a lot. Can you understand that?
Yes.
Okay, that is why we are focusing on the wicks a lot. Okay, so now look at this here. Now, do you think any other smart money trader will draw out a zone like this? No, they can't. Okay, because what is this? Nothing, right? They'll think, okay, like there's nothing in here. There's nothing in here. Even if you go to the 15-minute, okay, now the supply and demand trade is like they can never take this trade because why? Supply and demand does not teach you to cut through candles like this, right? Okay, they do not do that. They'll mark out this zone, okay, or something like that. But for us, we have that exact zone right here. Okay, now even though it looks like it's mitigated on a lower time frame, but you saw that, right? On the 4-hour, the base of the wick has not been tapped yet. Okay, so that is why I told you an order block, a breaker block, a rejection block, anything, it is not a candle, it is not a zone, it is not a wick, it is a price level.
Yes.
See that? This price level, this is the one that they need to mitigate out of. Okay, and like these are the real support and resistance zones. Okay, like once this gets broken, it will act as a resistance, and if it gets broken, it acts as support, and yeah, they will just bounce on these same levels. Okay, these same price levels. Okay, so these are the real support and resistance levels. Okay, that's okay.
I have a question about mitigation.
Okay.
Can we know if they will mitigate the same zone again and deeper? I mean,
in my opinion, I wouldn't use it if it is mitigated. Okay, I wouldn't use the zone if it is mitigated once. Like for example, let's say the 4-hour itself has come down like this and tapped into this wick right here. Okay, then I wouldn't even pay attention to this anymore.
Okay, so you consider it's mitigated.
Yeah, a one-time thing. Okay, like if it is mitigated, okay, I wouldn't even look at this. But now in here, see, it is not tapped yet.
Yes.
Can you see that? The base of the wick has not been tapped yet. Okay. So now what we could do is wait for Asia to end, and then let's just go on with the day. Okay, let's see what we can do. Okay, wait for Asia to end, look for a setup. Okay, so these days there was no daylight savings theme. Because of the daylight savings theme, the timings of the sessions have been changed. Okay, but this was during November, so there was no daylight savings thing. So let me mark out Asia. Now I'll wait for Asia to end, and I'll look for a setup.
Okay. You don't have an indicator for
Asia? I don't use indicators because the indicators can play around even for Asia. Okay, the timings are different and everything. I actually I don't use the ICT timings for Asia. I use the BTMM times. Okay, you might know BTMM. Beat the market makers. Okay. Yeah. Okay, those guys are crazy with Asia. Okay, but you don't want to look at that because they have tons of indicators. Like you can't even see the candlesticks. Actually, they have so many indicators.
Yes.
So yeah, I only learned Asia from them. Okay, not this accurately, but yeah, I learned Asia from them. Okay, so yeah. Let's see. And then let's wait until Asia ends. Look for another setup because we don't trade Asia. Okay, because ICT tells you Asia is the accumulation phase of the day. Okay, because the power of 3: accumulation, manipulation, and a distribution. Accumulation, Asia; manipulation, London; and a distribution. We don't care about the distribution. This is all we care about. Okay, so we don't trade the accumulation because it is very slow. Okay, so instead we trade with the manipulation. Okay?
It's not an Asian pair.
Yeah, it is not an Asian pair. Okay, so now this day, can you expect price to directly drop into your point of interest and go up? No, because why? Why are we not expecting that? Exactly, we have a strong low in here. See that? Stop hunt. and a break of market structure.
Breakout structure, yes.
Mark that out as a strong low. Okay. How do we know the low has created the high of the trading range? How do we know that? We have to get a bearish breakout structure, right? A
Yes.
swing low that created a higher high has to break. Okay. So which means, like, let's say it did a higher high and then it broke. Then what is the reason they're coming down? To take out the internal range liquidity. Yeah. So the Asian low will act as the internal range liquidity. Okay. Now what you could do is you could either wait until price gets here and look for a buy setup, or else you can wait until London does a manipulation of Asia and look for a sell setup. Can you understand that? You have two options. Okay. So let's see what to do. Okay. Yeah. Let's see what to do. Okay. There we go. Asian highs are taken out. Can you see that?
Yeah.
Yeah, the Asian high is taken out. Okay, Asian high is not taken out, and they're rejecting. And see, now they're starting to pull back down. Okay, now they're starting to pull back down. Let's go into a lower time frame. I don't think this is on November, right? Let's go. I don't think we can go to 3 minute. Let's go to the 4 minute. Yeah, it doesn't mean that I'm using the 4 minute. Okay, we can't go into the lower time frames. That is why I'm using the 4 minute. Okay, I don't use the 4 minute all the time. Okay.
Okay.
I don't even use it, but only for this example, just to show you, because trading view does not allow us to go into the 1 minute or the 5 minute. In 5 minute we can, but yeah, not the 3 minute. So what do we have in here? A stop hunt and a breakout structure.
Yes.
Yeah, not just a random stop hunt. It has taken out the Asian highs. Okay, so this turns into a strong high on the lower time frame, right?
So the strong highs that takes Asian are more
see,
respected.
Asian high is taken out, and then structural point has been broken. See?
Yes.
Can you see that? Okay, or else we have the formation we need very clearly. See this thing right here, broken. Okay, we have that. Then this turns into the strong high. Now, how do we know the high has created the low of the trading range? We have to get a bullish break, right?
Yes.
We have to get a bullish breakout structure. So let's wait for the bullish break. Oh, I think actually we had the break in here, because if you use a line chart, can you see that break?
A little break, yes.
Yeah, see that? A swing high that created a lower low has been broken. Okay, has been broken. Maybe, yeah, see, we have it broken, but on this time frame, we can't see that. Okay. Now, inside of the lower time frame range, we will look for a high time frame point of interest, right? If you go to a high time frame, what do we have? Who took out the Asian highs? Exactly, the wick.
Yeah.
Mark it out. Mark it out. Okay. Now what we do is we wait until London kill zone opens. Now those days the kill zone opens at 12:30 p.m. Okay, right now the London session opens at 12:30, but those days Frankfurt opened at 12:30. Okay, and then I'm waiting until the kill zone opens, and there we go. Now I'm interested in taking trades. Okay, now look at this. There's a swing high that is feeding liquidity into our point of interest too.
Yes, inducement.
Okay. Yeah, we have another little swing high. Then we set our limits here. Stop loss can go above that. And then we target Asian lows, because there's no point of targeting this, right? Only 8.2 pips. Okay, I'm not someone who uses these huge lot sizes. Okay, so for me, I will not get anything from 8 pips. Okay, nothing. So what I do is I target the Asian lows itself, because why? Asian low is a weak low this day, right? Okay, Asian low is a weak low. Okay, so we target that.
Okay.
And yeah, let's see what happens. Okay, so everything is fine. Stop hunt.
So you don't even know the higher time frame direction when you target the Asian low.
Now we actually know the higher time frame direction, right?
Yes,
we know on the higher time frame they want to go higher.
Yes, we know it.
Okay, we know that, but the thing is now until it goes here, okay, like there we can't just wait until it gets here, right? We can just play with the lower time frames. Okay, we can play with the lower time frames until it gets here only. Okay, until it gets here only. And also we know that a strong low is down here. Okay, and time and price now. Okay, time and price, a manipulation of the Asian highs, a strong high creator. So we are expecting a retest into that zone and then a drop. Can you understand?
Okay. Yes, okay.
Okay, let's see. And there we go. Okay, was in a little drawdown. And also remember, for every setup that I show you here, okay, always factor in the spreads. Okay, like even though this is my original setup on TradingView, I can't do this on MT4, right? So I'll do something like this. Okay, first thing is I have to get tapped in, and the other thing is my stop loss has to be safe.
Yeah.
Okay, so I'll do at least something like this.
Yes.
Okay, but yeah, I'm just showing you my original setup only. Okay,
okay.
So let's see what happens. Yeah. And then, okay, was in a little drawdown. That's okay. There comes the drop. Okay. Now what we do is move it to break even when price breaks below that low. Okay, we move it to break even, and then set your TP down here, because can you expect this to drop into these areas? No.
No.
Okay, you can't just take a trade from a random 30-minute wick and then expect it to like
Yeah.
go for a long time. No, you can't do that.
Yes.
Okay, you can't do that. Okay, and then let's see. There we go, into the targets. That's it.
Nice.
Okay, that is all you need for the whole day. Okay, that is all you need for the whole day.
Yes.
Now you're done. Okay, now you're done. Okay, now after you get this, you won't even look at the charts again. Like, why should you do that? Okay, why should you do that? Okay, you don't have to look at the charts again. Okay, but let's just monitor price action to see what's happening. Now you have a trading range created from here to here, because why? A swing low that created a higher high has been broken.
Yes.
Can you see that? Now your range was from here to here, then internal range liquidity has been taken out. So after taking out internal range liquidity, where will they go next? External range.
External. Yes.
Okay.
Yes.
Yeah. Now we don't care. We don't care because we're not going to trade it anyway. Okay. We will be monitoring price action only. Okay. Until next day's Asia ends. Yeah.
You could have put a buy limit here.
No, I'm not going to do that now.
No.
Okay, I'm not going to do that. No, because why? I have the sell. I'm done for the day.
Yes.
Okay, I'm done for the day. And also, like, there's nothing in here that I could set a buy limit on, right? Okay, because I don't want to just buy it here with my stop loss below
it's too
this.
big.
Okay, 8.2 pips. Yeah, I'd rather wait for a confirmation entry. Okay,
yes,
but yeah, let's see. Then it started dropping. There we go. Internal taken out. Now they will obviously go for the external range. Okay, but we don't care. We're just monitoring price action only. And there you go.
Yes, nice.
Okay. Now, after you get this top hunt and this breakout structure, who is the next low? This one right here.
Yes.
Right? Here's the low of the next trading range. But then again, can we mark this out as the high? No, because why we not have yet. This? Not yet. Okay, so let's wait. Let's wait for the high to get created.
So now
nothing yet. Nothing yet.
No.
Okay. So only a wick, and there we go. A break. See that? Okay, now don't worry. We will not be trading any of this because why? Time and price. Okay, we mainly focus on the London Open setup. Okay,
yes,
the London Open setup.
Okay.
If you get this, you're done. Okay, you're done. That is all you need to do. Okay, like some people will tell you, oh, you can take a sell from here, then buy it back from here, then sell it from here, buy it from here. No, like imagine how many times they're getting stopped out before doing that. Okay, so don't do that. Okay, don't do that. Once you get this breakout structure, now your range is from here to here. Right? Now, what is the reason for the retracement? To take out the internal range.
Yes.
Mark that out. Okay, now once again, we don't care about anything until Asia opens. Okay, let's wait for Asia to end and look for a setup. Okay, from 3:30 to 10:30. Okay, let's see. And there we go. Asia started. Let's wait for Asia to end. Okay, there we go. Now this day, can you expect the Asian lows to get taken out? No, right? Because why? They have taken out the internal range liquidity. So now they are obviously going for the external range liquidity. Okay? Now just think of it. Yeah?
Even if they make equal lows, you don't fear that?
This thing right here? Yes. No, we don't have to fear. We don't have to fear because why? We know that after taking this out, now the next target will be here. Okay, the next target will be here. So there's no point of looking for this to get taken out and then a buy setup. Okay, instead what we could do is we could look for a continuation because why? Look at this thing right like this. Stop hunt.
Yes, a strong high, strong low.
Yeah, breakout structure. You can even mark it out that way. Okay, you can even mark it out that way. But now just think of it. After it runs above Asia, if you try to sell from somewhere around here, do you think it will work out? No, because why? Their next target after taking this out is above this high.
Yes,
right above this high. So taking sell from here is suicide once again. Okay. So instead, I told you, if the Asian low is a strong low, we will be expecting a retracement back into the midline. Okay, and then we'll be looking for a setup. You see that lining up with the midline, we have an order block.
Yes.
Okay, so let's wait and see what they're gonna do. Okay, let's wait for a confirmation. Okay, let's wait until 12:30 until Frankfurt opens at least. Okay. Yeah, look at that. Right at Frankfurt Open, what did they do? That is why I told you, focus on timing. Look how quick the moves are. Look how quick the moves are. Boom. Okay, shot up. Okay, shot up. And then, yeah, they took out this high. So after taking out this high, this turns into the low of the next range, right?
Yes.
Okay. But don't forget to look at the liquidity, because what are they doing now? Look at this trend lines.
Yes.
Can you see that? Okay.
Yes.
Now, if you mark this out as the low of the range and try to buy it here, you're doing the same thing as a retail trader.
Yes.
Same thing as a retail trader. Okay. Now, instead, what we do is, see this, all this liquidity is being fed into that 4-hour level that I marked out at the beginning of the markup. See that? Can you remember that
Yes.
4-hour level? All
Can-
this liquidity.
Could you
Yeah.
show me the again?
Yeah, see that wick right here? I marked out the wick that I marked
Yes.
here at the beginning of the
Yes.
session.
Never tapped.
Yeah, never tapped. Okay, so now all this liquidity, this trend lines and this HE and lows and all that liquidity is being fed into that level, right? So I told you, a high quality point of interest will always have liquidity above it. So here we have a very high quality zone. Like, can you see how they're building up? Can you see the story now? Okay, they're just making up all this. See, for 2 days, for almost 3 days, they built up this liquidity for this. Okay, for this. Okay, now let's wait. So now this day, I think it was this day. Since I saw this liquidity, now I tried to look for sell setups until this got taken out. I did some dumb shit on a lower time frame and got stopped out. Let me show you. Okay. Yeah, we do mistakes, right? We're all human. Okay, so I try to sell it from a lower time frame. Yeah, not because just a random lower time frame breakout structure. No, timing was perfect. Okay, London opened at 1:30, and right at 1:30, we got a breakout structure. Right at 1:30. Can you see that?
Yes.
Look at the timing. Okay, 4 minutes after London opened, we got a breakout structure in here.
Yes.
Okay, so then I expected a retracement back into this area and then a drop. So I was marking out something around here. Okay, and then I had my sell limits here. Okay, and then I targeted all of this liquidity now, because why? Liquidity is always our target, right? Liquidity is our target. I did something like this. Okay, then this happened.
Oh, damn.
Okay, yeah, stopped out. Can't help it. Okay, it's just a part of the game.
It's
okay, then I thought, okay,
it's because the strong eye is a too little time frame.
Yeah, maybe it was just a 4. Yeah, I did not even go to the 4 minute. I took it from the 1 minute. Okay, maybe that is why I got stopped out. Okay, but then I thought, okay, now stopped out during London. Okay, that's okay. Now I thought I'll patiently wait until New York opens and look for another setup. Okay, so now let's wait and see. Okay. Now can you see that?
Here comes the wheel move.
Yeah, stop hunt.
Yes.
Breakout structure.
Yes.
Okay, strong high, right? Strong high. Let's go into a lower time frame to get an entry. On the 5 minute, what did we have? Yeah, same thing. We had the stop hunt and a breakout structure in here. Okay, we had a breakout structure in here, but also you could have refined it to this strong high. See that? Stop hunt.
Yes. Yes.
Yeah, stop hunt and a breakout structure. Can you see that?
Yes.
Okay, let's say we mark this out as a strong high. Okay, how do we know the high has created the low of the trading range? It has to give you a bullish break, right? Yes. A bullish break. Do we have that yet? No, not yet. Okay, so let's wait for that. Okay, let's wait for the break.
Oh,
and yeah, there we go.
Yes.
Break of structure. Yes. Now your range is from here to here. Okay. Now you know the reason. Why are they going up? To take liquidity out the internal range liquidity. So what's the internal range liquidity? Swing highs that are inside of the trading range, right? So see, swing high.
Yes. There is many in this one.
Yeah, there's only one. See that? There's only one swing high. These aren't swing highs. This is a strong high. So we are not expecting that to get taken. Also, this is the only one we have. See, these are not swing highs.
They are not swing high. Yes.
Yeah, see that? Swing high. Okay, always focus on that, because that is where the buy stops are. Okay, that is where the buy stops are. Okay, so we have that. And above that, we look for a high time frame point of interest. What do we have? The body of the candle.
The order block.
Order block. See that?
Yes. Yes.
Not tapped yet. Okay, not tapped yet. Draw that zone out. Okay, now the thing is, if I mark out the zone like this,
there was
imbalance. This, will anyone have any idea what this is? No, right? No. What do you have on this week? There's nothing. Okay, there's nothing. Then they'll tell you he's a scammer and everything. Okay, but no, they don't know what to do. Okay, they don't know what to do. Okay, so now what we could do is we could sell it, expecting price to get here by New York at 6:30. Okay. Now, yeah, you can even have your stop loss above that wick, no problem. But yeah, I know you will fear this imbalance, right?
Yeah.
Then you can have it above the candle that has the imbalance, just 3.8 pips. Okay, why should you be greedy? Okay, and then we target external range liquidity.
Yes.
Okay, we target external range. So let's patiently wait.
Do
Okay.
you think
Yeah.
we can put 1% on this trade?
This trade, yeah, you can even
Yeah.
do 1%. Yeah, the
Yeah.
risking thing is totally up to you. Okay, that is
Yeah.
totally up to you. Like for
Sure.
me, of course, I do not risk 1% because now I'm trading a 100K FTMO account. Okay, now why would I risk $1,000 on 3.8 pips? 3.8 pips. Okay, I'm
Yes.
not gonna do that. Okay, I'm not gonna do that. Okay, I will
Well,
risk only on $100 to $150 per trade. Okay,
yes.
so even if I risk $150 on this trade, I have
Mm.
something like a 4 standard lot size. Okay, so
Yeah.
4 standard into 30 pips, that is $1,200. So more than enough for me. Okay,
Yes,
that is more
enough.
than enough for me.
Oh, sure,
Okay,
sure.
yeah. Okay, so let's see.
Because I have to I have to get a challenge too in the
Oh, yes.
future.
In the future, yeah. Make
Yeah.
sure you're confident enough before getting the
Yes,
challenge.
yes,
Okay,
yes.
yeah. Okay, and that's like always risk what you can afford. Okay,
Yeah.
just because someone else is risking 1%, if you feel like your mind can't bear up that 1%, don't do that.
Mm.
Okay, don't do that. Okay,
Yes.
risk what you can afford. That is what I would
Yes.
do.
Okay,
Okay,
okay.
yeah. Let's see what's happening now. Okay, yeah, more liquidity. See, equal lows created. Okay, so we know that anyway they're gonna
Yes.
drop down now. Okay, but failed to get here by New York Open.
Mm.
So let's see what happened. Patiently wait, patiently wait. And there we go.
Oh,
Tapped.
just nice.
Okay. No drawdown basically. And then, oh, done.
Oh, yes.
Done
Super
for the
quick.
whole day. Okay, yeah. So the loss that you had here is covered now. Okay,
So,
with patience. See, if you
so
have patience, that's it. Yeah.
yes. And what was that a London Open? I
This is
didn't.
not London. This is New York.
No.
Okay, this is
New
New
York.
York.
Ah,
Yeah.
yes. Okay. Okay.
Yeah, we got stopped out here during London. I showed you that.
Ah,
Okay,
yes,
stopped
yes,
out
yes,
here
yes.
during London.
Yes, yes.
So we took the setup during New York. Okay, so
Ah,
patience, have
okay, okay.
patience. Okay, yeah.
Mm.
Now the best thing to do is, like, if you want, you can just take off everything in here, But since we know that there is a pool of liquidity down here, these trend lines, these Asian lows and everything, you can even target that.
Yes.
See that? You can even target that. But the best thing to do is, okay, like since we are in a retracement of the higher time frame zone, okay, the best thing to do is just take off everything in here. That's all you need. Okay, just take off everything in here. Okay, but yeah, since you know that there is a lot of liquidity down here, you can even hold it. Okay, look at the drop. Look how quick the drop is. Okay, it
Yes,
started
big
dropping.
one.
Now, yeah, do you think any other people will try can take this sell? No, they'll wait for this imbalance to get filled.
Yes,
But will it go there?
true.
No, because why? The higher time frame point of interest is here.
Yes,
Okay, they're not gonna
nice.
go there. Okay, yeah. Well, let's wait now.
I feel
Okay.
like smart money has become the retail.
Yeah, exactly. Smart money is the new
It's
retail.
true.
Okay,
Yeah.
everyone is doing smart money.
Yeah.
Okay,
Yes.
so it doesn't work that way. Okay, because now there are people who know what an order block is, but never know what a trend line is. That's how famous smart money
Yes.
concepts are.
Yes.
Okay, so yeah, let's see now. Okay, now once you get this set up, you're done for the day. Okay, step out of the market and yeah, just wait for the next day's Asia and look for a setup. Okay, because once you start trading this way, you have enough discipline. Okay, you're not going to trade every single time of the day. You wait
Yeah.
for a specific time, like a London session open, London kill zone open. Only
Yeah.
those times of the day you pull the trigger. Okay, so that
Yeah.
builds more discipline. Okay,
That's nice.
so let's see now. And then we wait for Asia to end and look for another setup. Here we go. Asia. Yeah, 3:30 to 10:30. Now we'll wait until Asia ends and look for a setup. What did Asia do? Look at that.
Oh,
Tapped right into that. See, I told you. Yeah, I told you. Like I told you. Look at the reaction from this high quality zone. Even during Asia, they tapped right into that zone and look at the reaction right away because there was a pool of liquidity in here, right?
Yeah.
There was a pool of liquidity in here. They cleared that out, but that's okay. Patiently wait because London has not opened yet. Okay, London has not opened yet, so we're not gonna trade within Asia. Okay, so let's see.
So you didn't put a limit on
no,
this?
No, I wouldn't do that. No, I wouldn't put set limits and sleep. No, never. Okay, those days I used to do that, but I won't do that now. Okay, because another thing is with Asia, you have seen the spreads, right? Spreads are wide. Okay, spreads are wide during Asia. So if I want to buy it here, my buy limit has to be set at least somewhere around here. So I don't want that. So the same way, the stop loss has to be bigger. Okay, so I don't want to do that. Okay. So now let's wait until Asia ends, and there we go. Okay, Asia ends. Now let's patiently wait for a setup. Okay, this is Asia. Patiently wait. Okay, now let's see what they're doing. No, look at this. Look at the reaction from the zone now.
Yeah.
70 pips, 77 pips in one
Mm.
day. Okay,
Mm.
starting from Asia. Okay, now they have taken that high out too.
They do it when people sleep.
Yeah. Okay, people say. Okay, let's see. Now they're starting to drop down. Okay, now look at this. Okay, now look at this. Now we have a strong low in here, right? Why? Asia is a strong low because you saw
Yes.
all this liquid got taken out and structure was broken.
Yes.
Okay. Now this, yeah, let's mark this. Give me a second. Okay. Now let's mark this out as the low of the range. Okay. Now, once it starts to retrace, now think of it. What will the other smart money traders do? Look at this. Oh, the order block that broke structure.
Yeah.
This is the order block that broke structure.
Flip
For supply
zone.
and demand traders, yeah, this is a rally, base, and a rally.
Yeah.
RBR. Okay. Now everyone will try to buy it here. Stop loss here. Target high prices. Right. But for us, a drop in a bullish market is a hunt for sell stops, right? Where are the sell stops? Below swing lows. So where is the swing low? Right here.
Yeah.
Can you see that? Okay, that is the swing low. So now everyone else will, now I told you, in order for the trading range to get created, you have to get this, right? A swing low that created a high has to be broken. So who is the swing low that created a high? This one. Yeah. So obviously, when this drop comes, it has to get taken out, right? Now, this thing, if they do not want you to make money, like why are they giving it to you this clearly? Traps.
Yeah.
Traps, inducements. Okay, smart money traps or anything. You can call it anything.
But
so now we will not. Yeah.
I have sometimes this kind of flip zone are
yes, sometimes it will play out. Sometimes
Yeah.
it will play out because just think of it. If you keep on losing every single time you come into the market, you will like not put your money into the market again, right? So what they do is they will give you a chance to win.
Yes.
Okay, then the next time you'll think, okay, once I saw this setup play out, so it will play out another time, and then the second time you do that, you get stopped out. The trade is like a casino. Okay, it's like a casino. This whole thing is like casino. Okay, yeah. And then like, now we will not be buying it here. We will be buying it below that. So what do we have below that? Right below that, imbalance. See that?
Yes.
Can you see that imbalance? See that? Look at this.
So you don't take the higher time frame POI?
No, there's no point of looking at the higher time frame POI because you can see the POI very clearly.
Okay.
And yeah, and the other confluence is extra confluence is the Asian midline.
Midline, yes.
Perfect.
The algorithm is
perfectly.
Always yeah. Okay.
Yeah. Okay. We have the Asian midline perfectly. Now what we do is when everyone else is starting to buy it here, we're going to buy it right below their stop loss. See that? We're going to buy it right below their stop loss, and our stop loss can go below the candle that has the imbalance. Can you see that?
Yes.
See that? The candle that has the imbalance. Now we can do this. Now this POI right here, this is what's giving me confidence. Okay, because why? I know that everyone will start to buy it.
Yeah.
Okay.
Yeah.
And then we target the external range liquidity like this once the range gets created from here to here. Okay. So let's see what happened now. Here it starts to drop down. Oh, and look at the reaction. Okay. Look at that.
Yeah.
More and more buyers. Okay. Yeah. More and more buyers are getting in. More and more buyers are getting in. And then boom, stopped out and we are in the trade. Okay. Stopped out, range created, and we are in the trade. Okay. So this was also London. Yeah.
This is London. Yeah. Oh, okay.
Yeah. This is London. This is London session, not the London Open, but the London session. Okay.
Okay.
And then let's see what happened. And boom, done. See
nice
that? The only thing you have to do is dodge their traps. Okay, dodge their traps. That is the only thing you have to do. Okay,
the obvious traps.
Yeah, obvious traps. Okay, the only thing you have to do is dodge the trap.
Yes,
okay.
Yeah. So it's not always it's not always London Open, but sometimes after.
Yeah, like most of the time it is London Open.
Yes.
Okay, most of the time, 90% of the time it is London Open.
Okay.
Okay, sometimes after a couple of hours after London, even then they can give the setup. Okay, I told you we can't expect perfectness. Okay, we can't expect perfectness. Okay, so sometimes it will take some time, so you have to patiently wait. Okay.
Yes,
so yeah, look at this. We have all of this. Yeah, I did. Yeah, I showed you the loss too, right? In here we took a loss. Yeah, that's it. That is all so far, because see, just one setup a day patiently. That is what we hunt for. That's why I told you the win rate will increase if you do that. Okay, the win rate will increase if you do that. Just one setup a day. You're not gonna go into like. Did I show you any setup from the 1 minute? No,
no,
nothing. We're working with the higher time frame because the lower time frames are very messy. You know that, right? Okay, like we're not the algorithm. Okay, we're not the market makers. We can't read the lower time frames like that. Okay, so the best thing to do is go with the higher time frames. Okay, the higher time frames
Yes.
gives you a lot of clarity. Okay?
It's enough.
Yeah, it's enough. Okay, now even with the
Yes.
lower time frame, see only 2.5 pips stop losses, 3.8 pips, 2.7 pips. Okay, not bad, right? Not bad at
Yes,
all.
yes, that's
Okay,
nice.
yeah.
And
Now
do you
also, yeah,
do the same thing on gold? So
yes, same thing on gold.
yeah.
Okay, same thing on gold, but the minimum stop loss size I use on gold is 10 pips. Okay, sometimes we go for 6 to 7 pips too. If the
Uh,
strong high is like
uh,
the thing is now sometimes before London opens, okay, the volatility of the gold is very like it is not that strong. Okay, it is
yes.
not that strong. So before London opens, if you like, let's say this right here now, yeah, let's say Asia created a strong low during in gold. Okay, so that those times when you have a stop loss like this on even on gold, your stop loss would be only around 5 to 10 pips. Okay, then
Yes.
you can do that. But with New York Open, you can't have 5 to 10 pips. Okay, because
Oh,
the volatility increases and
okay.
it's very strong. It gets very strong, so the stop loss can't be put that long. Okay, then you
Okay.
will have to use at least 10 to 15 pip stop losses. Okay,
Okay. Okay.
yeah. Now let's see what happens. Okay, let's wait until Asia ends. But another thing is now don't forget to look at the higher time frames. Look at this. We are slowly reaching a premium price of the
Yes.
higher time frame range. Now it is
Yes.
time to start looking for maybe intra-week sells, right? Okay, long-term sells. Okay, like not long-term, maybe intra-week or something. Okay, so let's see. Now let's wait for Asia to end and look for another setup. Okay, there we go. Asia. Okay, Asia. Now, if you remember, that at the time that we marked out this zone right here, the weekly, daily, and the 4-hour zone, we never had liquidity resting below it, right? We
Yes.
never had liquidity resting below it. But I told you, a high quality point of interest will always have liquidity resting below it. Now look at what they're doing. Came right below that and created
Asian
an Asian
range.
high. Yeah.
Yeah.
Okay, created an Asian high. Okay, but for someone that is not using Asia, look at this. Even on the line chart, they gave you a breakout structure.
Yes.
Look at that. Okay, a breakout structure.
Mm.
No, if they're not using Asia, they'll try to sell it here.
Yes.
But do you think it will play out? No. Okay, now all that liquidity is being fed into the higher time frame point of view. Yeah.
Yes. Yes.
Now, since this right here is a higher time frame zone, can you directly go into a 1 minute and take a trade? No, this is a weekly, daily, and a 4-hour zone. How can you do that? Okay, how can you do
Yeah.
that? So now this is the day when like these are the times when you should like play the waiting game. Okay, you'll have to play the waiting game. You'll have to wait until price gets here and you'll have to wait for a breakout structure because like I told you, like you can't just go into a lower time frame and just because you have to get a trade for the sake of trading, you don't have to do that on lower time frame, right? No, don't do
Yes.
that. Okay, patiently wait, patiently wait. Now today, let's play the waiting game. Let's wait until you get a clear setup. Okay, there we go. Asian highs taken out, tapped into the point of interest. Now we wait. Okay, now we wait and see. Okay, the drop comes, no breaks yet. And there we go. Confirm.
Yeah.
See that?
Because we could
Yeah.
have we could have seen a strong low during Asia.
Yeah, we could have seen that.
But
okay, like
but
maybe
since
this
we
was a
have
strong low.
the higher time frame point of interest,
Exactly.
we
The high time frame point.
we don't expect a new buy.
Yeah, we don't expect a new buy because
Yeah.
also why are we not expecting a buy? Like why would we buy from a premium price? See that?
Yes.
Why would we buy from a
Yeah.
premium price of the range? Okay.
Yes, yes, yes.
But now this is we have the confirmation of the zone, right? Why? Even the 50 meters, if you go to 1 hour, even the H1 is now bearish. Can you see that?
Yes.
See that formation?
Yes.
Stop hunt and the break. Stop hunt and the break. Okay, now even the H1 has given us the confirmation. Now I told you the pro trend, the major trend is bearish.
Yeah.
The counter trend has also turned bearish after
Yes.
stepping into a high time frame zone, which means the range expansion, right? The range
Yes.
expansion.
It
Now,
will
if
go
you take
for
sells
the
here, if you take sells here, where do you target? Down here.
yes, external range.
Okay. Yeah. Now this right here is the corrective move. See the retracement. Now comes the expansion. Now we can expect moves like this, quick moves. Okay. We can expect quick moves like this. Okay. So now let's see what to do. Okay. So no trades yet. Okay. No trades yet. Let's mark this out as the high of the range on the 15-minute. Sorry for that. Yeah. How do we know the high has created the low of the range? You have to get a bullish break, right? So let's wait. Okay, let's wait. Okay, and there we go. Break of structure. A swing high created a
Yes.
lower low has been broken. See that
Yes.
very clearly on the line chart.
Yes.
Okay,
Yes.
then your range will be from here to here. Yeah, now you know the drill, right? What are you going to
Yes.
wait for? You're going to wait for the internal range liquidity to get taken out. Okay, so
Yes.
what is the internal range liquidity? Swing
So
highs, right?
we have two
Swing
ones
highs,
here.
exactly. Internal range liquidity. See that?
Yes.
Now, why are we expecting this to get taken out? Because look at this imbalance. Very suspicious, right? Why did they
Oh,
come up
yes.
this far and not fill it? Only 0.8 pips. They could have filled it, but why didn't they do that?
Oh,
Inducements.
yes.
Okay,
Yes.
inducements. Now people will try selling it from here. Like some people will even sell it from here. So some people will get lucky in here, but unknowingly. Okay, they do not know why this played out, but yeah, some people will also sell it from here. But now let's wait for Asia to end and look for another setup. Okay, patiently wait. Another confirmation. Why? We have the Asian highs right below that. See there? Liquidity.
Yes.
Now we know if it runs above the Asian highs, we can expect a bearish day.
So
Right? We can expect a bearish day. Yeah.
we had no sell in the previous day.
No trades
No.
that. That's why I told you we have to play the waiting game sometimes. See
Yeah.
that we were inside of the high time frame zone. Okay, we were inside of the high time frame zone. So
Yeah.
since it was a daily, weekly, and a 4-hour zone, we can't go into the lower time frame right away. Okay, so
Ah, yeah.
at least the higher time frame like the 15 meter or the 1 hour has to turn bearish, right? Then we
Ah,
can look for
yes.
setups. Okay,
Okay.
so sometimes you'll have to wait. Okay, sometimes you will have to wait.
Mm.
Okay, so we have that. Now we sell it from the imbalance like this. Okay, we sell it from the imbalance. Stop loss can go above the strong high.
Yeah.
Okay, 3.8 pips. Then we target the low of the trading range. Okay, this will be your first target, and your final target will be down here.
Yeah, yes.
Because why? The range expansion, right? The range expansion. Okay, another confirmation to say that this level will hold is that if it runs above the Asian highs, we'll be expecting a bearish day.
Yes.
Right? We'll be expecting a bearish day. And look at all this trend lines.
Liquidity. Yeah.
Look at this trend line. All being fed into our level. Everything being fed into our point of interest. So let's see. Okay, and timing is good. Timing is perfect. Right at
London Open.
12, yeah, London Open, 12:30. See that London kills it.
Yeah. Ah,
Okay,
yes.
12:30,
Nice.
12:45. Okay, 12:45, and then here comes the drop. Oh. Man,
Ah, so
here
that's
comes the drop.
the big drop.
Okay, melted, yeah, melted like butter. Okay, now what you could do is take your partials and leave a runner into here. Okay, and leave a runner into here. Now
Yeah.
we know that the range expansion has started, right? Range expansion has started. Now, can you see how the bearish momentum is increasing? Look at how the bearish momentum is increasing, because
Big
why?
one.
The higher time frame is bearish. The lower time frame also turned bearish. Timing was perfect. Now the bearish momentum is increasing. But the
Yes.
bears
Yeah.
are stepping in. Okay, the
Oh.
bears are stepping in. Okay, now after you get this trade, you're done. Okay, you're done for the whole day, right? Like after you get something like this, why would you even look at the charts again? Right? Why
Yes,
would you even look at
of
the charts
course.
again? Okay, so what you do is you pay yourself at how much is that? Yeah,
And
almost 50 pips. Yeah.
how many percent do you take as partials?
Like me personally, now since I know it's gonna go here, I'll take out at least 40%. Okay, at
40?
least 40%, yeah, and then 60%
Okay.
will be going here. Okay, but for
Yeah.
this, 100%, taking out 100% from all these setups. Okay, because
Okay.
there's no point of leaving runners because we were in a retracement. Okay, but this
Yes.
we are in the expansion. Okay, so
Yeah.
our targets are longer because see now all of these were based on lower time frame points. Okay, but this
Yes.
is a higher time frame point, right? So if it's coming from a higher time frame, we leave it to the higher time frames. Okay,
Yes.
so like
Okay.
that. Now after we get this, we're done for the day. We wait for next day's Asia and we look for a setup. Okay, so let's wait. Like, can you see how interesting this is once you work with ranges? Okay, very interesting.
Yes. Very nice.
Now let's wait for Asia and look for another setup. Okay, don't fear pullbacks. Don't fear pullbacks. Okay.
Oh, it don't go for the external
Yeah,
range.
they're not gonna go here. They're not gonna go here once again. Why? Stop
No.
fund, breakout
Yeah.
structure, strong high. Okay, it's a strong high now. Okay. Let's wait for Asia to end. Oh, this days here after 3:15 comes 5:30. There's some issues, so let's take it out from 5:30. Asia. Let's wait for Asia to end and look for a setup. Okay. Now this day, okay, ask yourself, is it safe for you to look for buys from here? No, right? Okay, the
No.
buys will be very risky anyway, because why? The major trend is
Yeah.
bearish. The lower time frame has also turned bearish, so which means the expansion has started. So we are trying to go against the trend when
We
the
want
market
to
is
sell.
actually with the trend. See that? Yeah. So if you are not going to look for buys, the only thing you have to do is look for sells. Okay, look
Yeah.
for sells.
Mm.
So where will high quality cells come from? High quality cells will come from above Asia, right? Above
Yeah.
Asia. So what do we have above Asia? Right above Asia, we have a strong high. Look at this. Liquidity taken,
Yeah.
structure broken.
Yeah.
Who took out the liquidity? The wick.
So weak.
Okay, the rejection block. And what makes the rejection block a high quality zone is the Asian high.
Yeah. Inducement.
See that? Inducement, exactly. Okay, now what can we do? We can expect price to get here by London keel zone at 12:30.
Yeah.
Stop
But
loss above the strong high. Yeah.
don't you fear the price to go higher? There is
Yeah,
imbalance.
that is why we mark out a strong high.
Yeah.
See that? If it is strong, we're not expecting that to get taken out. Okay,
Yes.
sometimes they might take it out, but that is
Yeah.
the reason why we understand strong highs, right? Okay,
Mm.
if it is strong, we are not going to expect that to get taken out
Yeah.
that way. Okay.
Okay.
Yeah.
Okay.
And then first target will be somewhere down here. Second target will be down here.
You know, most of the times strong highs
Yeah.
are respected.
Yeah.
Yeah.
That is why we mark it out. Okay, that is why
Mm.
I taught that to you at the beginning of the session.
Yeah.
Okay,
Yeah.
it is most of the time it will get respected. Okay, like
Okay.
I'm not saying it must get respected, but yeah, it will get respected most of the time.
Okay.
Okay,
Okay. Okay.
so let's see. Now I think this day, I think this day I think I got a break even. Let's see. Yeah, London keel zone failed to tap. Okay, look at that. It
Yeah.
failed.
Yeah.
Okay, it failed. But look at what New York did. Okay.
It's a fake.
Yeah. Look at this. And look at it.
Ah, yes, finally.
Then got tapped. Okay, this was New York. Okay, now what actually happened was, like, London keel zone is the Frankfurt session, right? I told you. Now Frankfurt took the Asian highs. Okay.
Yes.
New York took the Frankfurt highs.
Yes.
Okay. New York took the Frankfurt highs. Then what I did was, we got a breakout structure on a lower time frame. Okay. With this drop, we got a breakout structure on a lower time frame. Okay, somewhere around here. I moved it to break even. Okay, you know that, right? After you get a breakout structure, you
Yeah.
move it to break even.
Right.
Okay, now what I did was I moved it to break even, and then this happened. Okay, see, look at that drop. I moved it to break even. Yeah, came up, stopped me out at break even, and look at this. Boom.
Terrible. Terrible.
Okay, yeah. So no trades that day. Okay, break even. Break
Oh, damn.
even. So I was really pissed because why? I missed the sell in here. I was
Yeah.
patiently waiting until New York comes up. Then New York came up, stopped me out at break even, and
Yes.
then it stopped.
Oh,
Okay, so
no
one
luck.
whole day I wasted for nothing. Yeah. Okay, so can't help it. So what you could have done is taken your partials here,
Yeah.
and then left a runner into this.
Mm.
Okay, left a runner into this. So the same way, you wait for next day's Asia to end, and you look for another setup. Okay, so let's see. Okay, you see this, right? Yeah.
Do you always put your stop? You go to break even after a break?
Yeah. I'll go to break even after a
Every
breakout
time?
structure, because
Yes.
yeah, the thing is, a breakout structure means that a strong high is created, right? So now once I move my entry to this, I'm not expecting price to get here, because why? It is strong.
Yeah.
See that? Makes sense, right? Okay.
Yeah.
Now let's wait for Asia to end and look for another setup. Okay, let me mark out Asia. Asia is the best session of all. Okay, it shows you what to do. Okay, it shows you what to do. Okay, and there we go. We wait for Asia to end. Okay, now this day, are you going to buy it below Asia? No. Why? Risky. Okay, where is the magnet right now? Right below this
range.
External range.
Yes.
So buying it here is 1000% risky.
Yeah, no sense.
Okay, very, very risky. No, yeah. We're going to look, like, if you are not going to buy, you can look for sales, right? So where will sales come from once again? High quality sales will come from above Asia. Okay. Now, let me show you something. Just remember, let me draw a horizontal line. This is where the Asian high is. Okay, the green line is the Asian high. If you go to the daily, where will the next daily candle open? From here, right?
Yes.
See that? So when it opens from here to here, what do you have? An imbalance.
Imbalance.
Mark that out. Okay, the low comes in at what's the low? 34075. Okay, you have an imbalance. And what makes that imbalance a high quality zone is the Asian highs liquidity right below that. Can you see that?
Yes.
Liquidity. Okay,
Yes.
Asian highs. And then what we could do is, since this zone makes no sense at all on the 15-minute, we can do a slight refinement into the 15-minute imbalance. Only a slight refinement. Okay, I'm not gonna move this daily imbalance into here. No. Okay, just a slight refinement of around, what's that? 1 pip. Yeah, 1.5 pips. Okay, and then now I'm marking out the Asian high as liquidity or as an inducement, like this. And I'm expecting price to get to my point of interest by 12:30 at London. Same thing. Yeah.
Don't you see in Asian high a strong high?
This high right here, we can mark that out as a strong high, but when you see that daily imbalance very close to here, can you expect that to hold? Risky.
Okay.
Very, very risky. Can you understand that? That is why I dropped. Yeah, that is why I quickly like moved into a daily time frame and showed you that imbalance.
So daily imbalance is a stronger POI.
Yeah, it's stronger than this, stronger than Asia, right?
Yeah,
stronger than Asia. Okay, remember that too. Be very flexible. Okay, be very flexible. Now, you like I could have marked this out as a strong high, no problem. Stop hunt break or structure. But when you have a daily imbalance right above that, how risky is the setup from here? Right? How risky is the setup from here? Okay, something like that. Now we can mark this out as liquidity. Okay, we can expect price to get here by 12:30. That is London kill zone. Stop loss can go above the candle that has the imbalance, 3.9 pips. First target somewhere around here. Second target will be here.
Yeah.
See, that is why I told you, once the direction is clear, can you see how easy the entries are? Okay, the entries will become very easy with time and price. Okay,
nice.
So let's see what to do. Okay, let's see what to do. And yeah, let's see. Okay, timing is perfect. 12:30, kill zone has opened. So this is the time when we're expecting a manipulation, and then bam. Look at that. Okay,
so
now look at this. Yeah, so quick. Now, if you go into a lower time frame, even on the lower time frames, you can see just 1 or 2 candles. Okay, look how quick the move is. Okay, now what will retail traders do? They will start chasing this, right? See, 28 pips in 8 minutes. Okay, everyone will think, okay, now Frankfurt is going to be bullish. Let's buy this. Let's buy this. Everyone starts to buy this. Okay, then smart money traders will think, no, well, even though the retailers are chasing this, okay, we're not going to chase this because why? They think they are smart. So what they do is they will wait until it comes into the order block once again. RTO, okay, return to origin. And what have you been taught about order blocks? If it takes out liquidity, if it breaks structure, okay, if it has an imbalance left, a high quality order block, right? Now people will think, oh, look at this move after this push down, a high quality order block. Everyone will start buying it, but do you think it will play out? No, because the liquidity is here. How can this play out? Okay, then what happened? Let's see what happened. Okay, and then
they give a little reaction, not even a reaction.
Not even a reaction. Okay, straight through it. Okay, straight through it. Now you could have taken your partials from here, intraday partials. Okay, because always make sure you pay yourself. Okay, that's the main thing. You pay yourself and then you leave the runner.
Yes.
Like this. And done. Out of the 4-hour range.
Yes, finally.
Okay, so the 4-hour range has been completed. The 4-hour story is completed now. See that?
Yes.
Okay, very clearly the 4-hour trade. Can you understand this now? Okay, from up to down.
Amazing.
Okay, yeah. Okay, so from up to down. Now, if you remember, what did we do on the daily? Okay, on the daily, I told you this was the high of the range, but we couldn't mark out the low of the range. Then what did we do? We dropped one time frame lower, right?
Yeah.
One time frame lower into the 4-hour. Now the same thing in here. Now, once you get a break below this low right here, then this turns into the next high, right? On the 4-hour.
Yes. 4-hour.
But can we confirm the low? Can we mark this out as the low? Because no, why?
Not
because
yet.
We do not have a break. Then what do we do? Drop one time frame lower. Same thing. Okay. Drop one time frame lower. Now you can clearly see that. Why did we call this the retracement? Because see, for price to get from here to here, how long did it take? 7 days and 5 hours. Okay. But for it to drop from the same area, how long did it take? Just 4 days.
Yes.
That is why we call this the expansion. You saw that the expansion is really quick. Okay, the expansion will always be quick. Okay, now look at this. Since we do not have a range on the 4-hour, but since we broken out of the since we have broken out of that 4-hour range, now we have another strong high on the H1. See that? Stop hunt of the Asian highs. break off market structure. Can you see that? Okay,
Yes,
break
yes.
off market structure.
But
Even
can't we take this strong high in H4 too?
I think it was a strong high on the H4. Yes, it is.
It is.
See that? Stop hunt of a swing high, break off structure, and not just a random stop hunt, the stop hunt of the Asian highs previous days. Okay?
Yes.
Yeah, and who took that out? The wick.
The weakest.
Okay, he's the one that took that out, right? Now what we could do is mark the and the best thing is, can you see how I'm using all the time frames? I'm not staying on one. Okay, I'm going from this to that. Okay, all the time. Okay, so because a multi-time frame analysis is necessary. Okay, you can't stay on one time frame, like I told you. And then now what are we going to do? We're going to wait for a bullish break, right? We're going to look for a bullish break. Okay, so let's see. And there we go. The bullish break of structure. What's your range from here to here? This turns into your trading range. Okay, now we wait for the Asian session to end. Look for another setup. Okay, Asia.
Yes.
Yeah, this is where Asia is getting started. Now look at that. Never tapped into that. See that? Never tapped into that.
Yeah.
See? Inducements. These are inducements too. See?
Yes.
Never tapped into that level. Yeah. Okay, so we wait for Asia to end. And there we go. Asia is now over. So the Asian highs, this high, all that liquidity is being fed into the 4-hour rejection block. You saw that, right? Like
yes.
Okay, the one that we marked up. So same thing. We sell it here, expecting price to come here by the London kill zone. Stop loss can go above this, but remember, now this trade is risky, a little bit risky because why? If this is the trade in range, this could also be internal range liquidity. So I'm not going to risk as the normal amount that I risk on the other setups, because this is a risky setup, a high risk setup. Okay, so then yeah, knowing that it's a high risk setup, I'm still going to take the trade. Okay, because we have to take a risk, right? Or else you won't get that reward. And then we target the external range liquidity like this. Okay,
so don't you think that since price made a breakout structure bullish, it will go bullish in H4 now?
No, not on the H4. See that? Not on the H4. Can you see that break on the H4 yet? No.
Yes.
No break. No breaks. That's what I told you. Like if it is a 4-hour, at least the 1 hour has to turn bullish. Okay. Not the 15 minutes. Okay, not the 15 minutes. Those are just lower time frames. Okay. Don't focus on that. Okay. Yeah. Then let's see. And there we go. 12:30. Right at 12:30. See that? And then tapped into that level, and then comes the drop.
Yes, nice.
Same setup again and again and again. Okay. Every time it's the same setup. That's why I told you, once you identify the direction, your entries will be like clean as fuck. Look at that. Very easy. Okay, very easy. Look at this. Okay, now for all 4 setups that I showed you here, what did we do? Asia, sell. Okay, then again, Asia, sell. Range created, Asia, sell. Okay, so this is pretty much what we did, right? Sell, sell, sell. Okay, so once you get the direction clearly, that's it. Okay, because you have only 2 options. Either it's a buy or a sell. Okay, if you identify the direction properly, you know where to sell. You know where to buy, you know where to sell from. Okay, so yeah, is this clear now? Let me know. Is everything clear?
I'll have to rewatch this.
Rewatch. Now watching isn't enough. Backtest. Okay, backtest. Okay, like let me show you.
That's the main thing where I have troubles backtesting. But I will do.
Yes, backtest. Okay, make sure you backtest. Okay,
it's not easy with all the time frames to switch like that.
Yes. Switching through time frames, that will take a long time for you. Okay, that will take a long time for you. So make sure you backtest. Okay, backtest, and if you have any questions, you can send it to me with a voice note or something. Okay, your chart with a voice note or something. Okay, so is everything clear? Let me know if you have any.
It's clear. It's nice.
Yeah, so you got something new, right? I hope you got something new.
Of course. I saw some stuff from ICT, but
this is ICT. Maybe like the proper way. We're using ICT like better than him. His own concepts were using it better than. Yeah, no offense, but yeah, he's the best. Okay, well, yeah. So you understood this, right? I hope everything is clear.
Yeah, it's very
Yeah.
nice, man. It's very nice.
Okay, bro. So that is it from me. So if you have any other further questions, you can always hit me up. Okay, just send me a message on Telegram with your
Yeah.
chart or anything.
Okay,
Okay.
that's cool, man. Thanks.
All
Okay.
right, bro. Okay, bro. Have a
Okay.
good day then.
Okay, man. I cut the recording.